Welcome to the Midday Show. Learn how to trade. That's your girl, Adara. I'm Sharif. And it's great to have you for the final day, Adara, of
risk management.
There you go. Okay, so we have a nice one for you today. We'll be covering 3 topics. Maybe we'll wait a little bit, more people jump in the chat. I don't see too many people there. There we go. All right, some people coming in. Shout out Michael Lloyd, Bob Dubb. Thanks for joining us today. Piccolo, Ponzi Fonzie as always, and then Big Adam, the #1, numero uno Arsenal fan, slap chop guy, probably the best name there in the chat. Gotta love that. He was the ShamWow guy before he was a slap chop guy.
I didn't know the snap chop. I know the ShamWow.
ShamWow, it was amazing.
I know the ShamWow. Bless you.
There we go. Come to the screen, Ram, because people need to know about the ShamWow. There he is. What a handsome gentleman he is. But no, in all seriousness, guys, we are brought to you by Search Trader, account funding of up to $1 million. Keep up to 90% of the profits. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the folks there at Search Trader, who I still believe, actually, I was looking at their site earlier, they still have that trading competition going on. So we'll have to look at that. All right, guys, first and foremost, I did update the topics manager, Ramin. There we go. There we go. All right, guys. We're going to start off today by talking about the 1% rule on the final day of how to manage risk as a day trader. We gleaned over this a little bit, a couple of times, I believe, because we were asked about it in the chat about the 1% rule. But here it is. Let's talk a little bit about it. Successful traders don't look to trade more than 1 to 2% of their account on any one trade. So if you have, say, $10,000 in your account, you're going to risk about 1 to 2%. This means that you're risking about $100 on the trade, per trade. By taking smaller risks, you will not blow up your account with 1 or 2 losing trades. And believe me, in the beginning, you're more likely to be on the losing end of the trades than on the winning ends. Believe me, that just comes from personal experience. Taking additional risk can be dangerous and detrimental to your long-term profits. And believe me, you want to be here for a long time, not a short time. Part of being a good market strategist is to be disciplined and stay cold with the numbers. You got to stay cold.
Yeah, stay frosty.
Stay frosty, my friends. I love that. Quickly, I wanted to talk about the futures, but we'll just finish this last little part here. As mentioned, it is impossible to win every trade. That just goes without saying. But the ones that are only 1 to 2% of the account, then the account is much higher probability of surviving, especially in the early stages when you're taking more L's than dubs. The 1% rule can be adhered to through careful consideration of trade size, and obviously we talked a lot about this earlier, the stop loss. Yes, that trusty stop loss has to be used. If it's not, then you know, you could find yourself on the wrong end of it.
Yes, your stop will not be lost. I mean, and your money will be, though, your profits will be. Yeah, I think the other thing with regards to the 1% rule that I think is interesting is, so basically, I think, you know, using 1% to save 99% of your profits, right? But I also think with that in mind, you also still have to make sure that you are using, you know, stop losses. You're still trying to protect yourself within those trades, right? So it's like the 1% rule is good for kind of the overarching picture of your risk, but you still, it's always good to use specific risk management strategies as well in addition to that, right? So position sizing, which we're going to talk about later, making sure that you're really, you know, trying to maximize your profit on the trades you do win, right? Especially if you know you are going to lose some trades, which we all do, win some, lose some, right? You really want to make sure that you're trying to make the most of the profits of those trades that are successful. And so that with that comes, you know, maybe you do risk reward, maybe you decide, hey, I'm going to, you know, this is where I want to get out, this is how much I'm willing to lose for that profit. I think really, yeah, planning is, I think, the optimal situation with regards that with the 1% rule, I think can really help you maximize profits while minimizing risk. Also, the market is tanking.
Market is absolutely in a state of tank, but we're going to digress for a second here because I need to point this out on the futures. Guys, come to the chart if you're able to. This is not by accident, and this goes back to what I was talking about earlier in the week. Look to see if the particular indicator that you're wanting to use, in this case is going to be Vwap, is being respected by the instrument that you're trading. In this case, we're looking at the ANQ December contract, and the indicator that's in question is Vwap, volume weighted average price. Once twice, and you guessed it, OB thrice. How many times are we going to reject off that VWAP, guys? That is not by accident. The 15,875 is not a price level that is of any importance. Neither is that 15,870. It is VWAP, which is which is acting as a clear area of resistance. Look how many times we've rejected off that after breaking through it early on in the pre at around 8:30 or so. We broke down below VWAP after breaking above and holding above 15.9. That has not been the case subsequent to that. VWAP clearly a level of resistance today on the NQ, and I would suggest to you that maybe a long position is not warranted until there is a clear and decided break north of that VWAP. Now, you may want to wet your beak, right? You're saying, well, Sharif, I mean, let me get in one contract at the lows here, and if it breaks 5, 10 points below the low, I'll get out, and I'll take a little slap on the wrist. Well, I mean, that could be your position, and if that works for you, fantastic. What I want to look for is confirmation that the trend has changed, especially in light of the fact that the trend is so well defined here with this particular level being a level of resistance. So I just want to point that out for any of the futures traders out there. And I would say to you that, that this probably applies to the majority of the Mag 7, save and except for TSLA, which is independently strong on the day. A bit of a Christmas, upside down Christmas tree here. V-shaped recovery off that big move down at the Bell Adera, and it's been recovering quite nicely, breaking through yesterday's close at around 233 and 2/3 general area. Yeah, so I just want to mention that quickly before we get, bless you, before we get back on topic. All right, let's talk, see what people are saying here in the chat quickly before I go. On the Hayes record, shout out to you, my friend. Thank you for that $1.99 super chat. Scalped Amazon 143 call, 206 to 255 in 13 minutes. I'm back, baby. Silverback. I want to see the silverbacks. Right?
I saw the silverback gorilla and I was like, I love that as like a pun and just like, to kind of highlight the point, yeah.
Anytime I think of silverback, it's like that 50 Cent song. Silverback gorilla in the, silverback gorilla in the concrete jungle. We're the strongest around, how we get down. Yeah, that's from I think that's the G Unit album, actually.
Nice, okay, yeah, I know Into Club really well, but most of the 50,
I'm dating myself here a little bit. Mike. Take out pre-market, Head and Shoulders, November 14th to 17th at neckline. All right, Mike, sounds good. Blackberry, I expected that the NQ move, but it took me 6 failed trades today because I didn't realize we were moving sideways. Will we break that CPI movement? Look, man, it's Friday. Anything can happen. Walk collar Fridays. We used to call them free fall Fridays. We'll have to see what we get. But, obviously we're up big on the weekend. It's not unusual for us to get back a little bit. All right, let's go on to the next topic, Adera. And again, just like we have been doing the entire week, we're going to go through these topics, but they're obviously not going to fill all 3 hours. So we're going to cycle back to them later. So if you miss a little bit, do not worry, we will get back to it. So we talked a little bit about 1% rule. It has obviously something to do with position sizing, but that doesn't mean you need to take 1% of your account every time. There are other ways that you can determine how to get or what position size to take depending on what equity instrument that you're trading. So for example, position sizing obviously refers to determining the size of a position within your portfolio, or essentially the number of units, whatever shares, contracts, what have you, of a security that to buy or sell. It plays a critical role in risk management. You can go to the chart. As the size of your position can significantly amplify or reduce the potential risk or harm, right? So 3 different types of position sizing that we're going to talk about today. We're going to talk about fixed position size. This method involves trading a set number of units every time. While it's straightforward, it may not be optimal for managing risk. That means if I get into Intel, I'm punching 100 shares long, but if I get into Nvidia, I'm also going to punch 100 shares long. You better believe I am not going to do that. Nvidia is far more expensive, far more volatile than Intel, and you can just see that by observing them for one day and seeing how they trade. So fixed position sizing, to me, it's way riskier and harder to manage risk on that. But some platforms, they make it easier to punch in with a fixed position. Like I'll give you an example. My platform here, IBKR, right? it has these hotkeys, and the hotkeys don't allow me to get in out of a certain percentage or get out of a certain percentage of my trade. So I actually have to make each hotkey a certain buy or sell for a certain amount of shares. So that's a little tricky. So if I have, it would have been nice if there would have been percentages. If I get in 100 shares and I want to scalp out 25, it would take out 25 there. But if it was 200, it would be 50, right? That's not the case on my platform, and so there is a little bit of an issue with how the platforms are structured and how you trade in reality. I mean, I'm sure there are other platforms that probably allow you percentage. Mine doesn't. Anything to add with respect to that?
Yeah, I mean, in terms of, I know I've talked about this a lot, and I've been doing this less recently. Oddly enough, for Risk Management Week, I've been kind of just taking smaller position sizes in general, and then just taking everything out because, to be honest, it's been kind of more of a mixed week with trading where there have been some days where we haven't really had winning trades, so then I just take everything out when we hit like this kind of stop loss area. However, I think one method I really like is when you're basically taking out a 2/3 or a third of your position. Yeah,
they just want to fix your mic, so I'll take over for a second. All right, guys, second thing.
Okay.
Second type of position sizing that we're going to talk about, percentage risk. Obviously, that overlaps a little bit with the 1% rule, but I think the 1% rule here is meant more of a maximum rather than a thing that you're going to trade with every time. So percentage risk here, the method involves risking a predetermined percentage of your trading capital on each trade. This ensures that you never risk more than you're comfortable with losing in a single trade. In this particular case, we already mentioned the 1% rule. With more experienced traders, they can obviously increase a little bit, 2%, 3%, and then you can go from there. And then percent volatility, right? The third type of position sizing method, percent volatility. This method adjusts the trade based on the security's volatility. A more volatile security would lead to a smaller position size, while a less volatile security would lead to a larger position size. So what better example than the small cap gappers? We had an absolute monster of a trade or of a stock yesterday by the name of SGD. Is it SGD or SDG? Allow me to look. It's SGD. Okay, and so this wasn't available on our system yesterday. I'm told it's available today, so let's have a look. All right, and now let's go into the 15 or the half an hour, probably a little bit of a better look here. Actually, forget about that. Let's just bring in the side chart over here. I'm not a big fan of these charts at all. SG. All right. And let's go to the 5. I will be able to see it here. Okay, so all this over here, this is all halts. Okay, so imagine getting in a large position short, for example, over here, and it continues to run from $3 into 5. So this one, obviously, you're going to be able to tell right away it's up. It was up, I think, 1,700%. This is the one where it just screams at you, take smaller size. The volatility is there, so you have the capability to make more money just based on the volatility. You do not necessarily need to size in like you would on, a stock that's only moving 10 to 15 pennies worth of range. You really need to size in heavily there. So the more volatility, the lower share size you should have. And especially if you were getting long, I mean, up here got at $6. Look at how many down halts, 2 down halts, but 2 down halts basically accounted for the for like 5 or 6 up halts over here. They were much longer, by the way. These are all 15-minute halts. You could find yourself on the wrong end of the trade with these small cap gappers. There's just no question about that. So the volatility should absolutely affect what share size you're taking. The more volatile stock, the smaller size you should have. Adair.
Yeah, I think too, and I like kind of what I was getting at a little bit is, yeah, I think sometimes I like to piece out of a position, even if it's going well, because you want to like take some profits for the road, keep the opportunity, like saving a piece for the dream. I did that yesterday. I believe it was yesterday or another day this week where I basically decided to like strategically place some of where I wanted to get into the trade earlier, so got out part of it, and then it's like you set, if you think it's going to go higher, you set to get rid of some of it later, and then kind of decide from there if you want to save a piece for the dream. Also, I want to talk about this Macys trade with regards to that, actually. So I'm in Macys right now, got in at 14.24. I got in because I saw 2 green candles. It doesn't look very retracey. I would say more so it looks like, we're having potentially these higher highs. We're almost 7% up on the day, so I think the general pattern here is positive. We talked about how, and I do this sometimes, do this quite a lot, especially as I'm scalpier, sometimes feeling that inclination to go long, scalp long on a day where we're actually down on the day. But Macys up almost 7%, so I feel comfortable with this. But with regards to piecing out, maybe I take part of my position out around where this top wick was, around this 14.35, because it's always a little bit nerve-inducing to get into a trade, nerve-wracking, what have you, to get into a trade when we're at high of day. You don't really know where we can go from here, right? It's also a little bit riskier, so you kind of have to plan accordingly. So I might get part of the position out at this 14.35 and then save a piece for the road if we get to like 14.50. So it's really about thinking about position sizes with regards to, you don't have to have the same position size every time. It's kind of how much you want to piece out. I don't really do percentages. I usually do like halves or thirds. So that's real-time example with this Macys trade. We'll see how this goes, but I'm feeling pretty good about this day 2 earnings play. Yeah, just really if a stock has a catalyst too and it's moving for a reason, sometimes I find it's a little bit less risky as well, because it could have some kind of catalyst to sustain this move, rather than sometimes the small cap gappers just kind of popping off of nothing.
Absolutely. All right. Now, with respect to hedging strategies, this is not something that we typically use on the trading floor, but this is something you can absolutely implement at home on your personal trading account. We're going to talk about 3 different hedging strategies to basically help manage risk with respect to your position. The first and the foremost, well, what's hedging? What's hedging an investment? Hedging, it is an investment strategy used to offset potential losses that may be incurred by other investments. In simple terms, essentially, hedging involves taking an opposite or neutralizing position in a related security. First, there's direct hedging. This involves taking the opposite position in the same security. That's not something that you can do in the same account, nor would be something that I would suggest. The other one, the indirect hedging, which is obviously a lot more used, this involves taking a position in a related security. Let's take, for example, Walmart and Target. For example, you could hedge a position in a company stock by taking a position in its competitor stock. So we saw Walmart and Target move in completely different ways this week. We were expecting the exact opposite. We were expecting to see continued weakness in Target because they don't have as much groceries. They have more discretionary items, which is not really what the look you want when you are in a high interest environment where the consumer is being squeezed. That didn't end up happening though, right? Walmart ended up selling off all-time highs and Target skyrocketed. Why? Because they were under pressure to control costs. So if you had taken a hedging position in Walmart, if you were long Target, well, then you obviously, sorry, the other way around. If you had taken a position in Target long, even though you were long Walmart, the loss in the Walmart stock would have been made up by the move up in the Target stock. So this is an indirect way of hedging. Okay. The options contracts also helps as well. Puts and calls. Options give you the right, but not the obligation to buy and sell a security at a predetermined price within a certain time frame. We know that there's 3-week calls, 3-week puts. I can show you guys that in a second on my options chain. They can be used to hedge against potential losses. So we hear a lot about this, right? Okay, I'm going short Nvidia. So I'll take, in this case, you don't actually have to take an options. You can go long the NQs, for example, because they are so heavily connected. So if you're going to short one of the Mag 7, one of the hedging strategies you can use is to buy calls against the actual equity itself, or you can go long the futures contract. So many different ways. The idea here is basically to help offset some of the losses if the position goes against you. Again, this is not something that we use on the prop floor. This is something that you can use at home because we have to be out of all positions by 4:15. Otherwise, we get yelled at, by the way. And yeah, Daniel You can take opposite directions with options common trading method. Yes, I wasn't talking about options, sadly, though, because we don't have them yet, just with respect to what you can do at home. What else is being talked about? Sharif, I like your shirt. Thank you, Rizwan.
I saw that. I was like, that's very sweet.
Appreciate you there. What else we got? Yeah, Tesla is looking good. And anything to add with respect to hedging strategies?
Yeah, I think it's a strategy that honestly still a very new trader, something that I'm definitely kind of working on. And I find also it kind of challenges my notion of, especially if you're looking at indirect hedging. So if you take something in, a competitor stock, like for example, I find sometimes how some of these EV stocks, we just mentioned Tesla, right? Sometimes Rivian and Tesla will kind of trade in tandem, right? So I find sometimes hedging, I think it really kind of depends on the day, especially if you're going to do indirect hedging. As day trading, it's still something I have not really used, but I think kind of, I guess I don't know if this is necessarily similar, but kind of a strategy that I use sometimes that I think does kind of help hedge against your losses. If you're in a losing trade and then you back out and go the other way, sometimes as long as you do it properly, you have risk intact and stuff, you can actually, kind of be successful with that, right? So I think that's something that I guess that would be my experience. Honestly, yeah, still getting very used to the whole idea of hedging, but I think with indirect hedging, at least lately, it seems like a lot of things in the same asset class trade in tandem. So I think it would be one of those things where I think I'd really have to wait. And it's risky too, right? But it is a way, through taking risks, you can also hedge your risks. There you go.
Yeah, so hedging strategies, again, just to kind of review, direct hedging, which I personally wouldn't do, but you can actually do in options, which is to take basically a long and short position in the same instrument, whether it's an equity or whether it's some other. Indirect hedging, which is where you can basically take a long in one company and a short in its competitor, and then options contracts obviously give you the obligation, but not the right, but not the obligation to take whatever, either a put or a call, north or south, on that to offset whatever position you've taken on the equity side of things. So those are important. Again, not something that we use on a prop floor, but absolutely something that can be used at home. And I would say to you that this probably would be more appropriate for swing trading. And this is maybe something that I can bring up with Michael Moss, what hedging strategies he uses, if he uses hedging strategies, because he is primarily a swing trader, and a good one at that. Very technically based. Rarely does he look at any fundamentals, so he's always sticking to the technical side of things. Obviously, being a chartered market technician, that is to be expected. Thank you, Jesse Hernandez. Love this midday show. Amazing. Sorry if we are talking about stuff that you already know about. We obviously apologize, but as you must know, we get new viewers every day. Many of whom are obviously new, and so really in order to kind of foster the community, help the community grow, we need to ensure that you guys know some basics, and we thought risk management would probably be the best one to start with, because if you don't have risk management skills, you may not have an account.
Yeah, what do you have if you don't have risk management? If your risks aren't managed, they will manage you, perhaps, maybe, yeah. But I think also with regards to risk management, it's kind of knowing when to just get out of a trade, and that's why I think having your exit points ahead of time is really important. Let's talk this Nvidia nightmare. The end Nvidia can stand for nightmare today, because that's what this short was. Good God. I got in on this short because if you look at it, like we're seeing, it looked like it was heading to the downside. We're negative on the day. All of the ingredients were there for a delicious short souffle. And basically my plan was to kind of get out around this 491-ish area, and then it was, as an out to take profit. And why? Because we didn't get any lower than that. And then in terms of like where my stop was going to be, I wanted to get out kind of around where this candle was, because that was, the last time we went lower, right? So it's like kind of looking at, I used highs and lows to get in and get out. We talked about that, like planning trades kind of throughout, right? So I did like the idea of this short. It blew up in my face. It went very poorly, but because I knew, I wasn't just going to sit and wait and be like, what if we go lower? You know what I mean? We're approaching Vwap now. So quite clearly, and we said that not every stock necessarily interacts with Vwap the same way, but I would argue that Nvidia today has definitely been dancing around Vwap. So I thought, it would be a level of note. Looks like it was. The point I'm trying to make is, if you know something's going awry, this is why you have stop set. This is why you decide where you want to get out. Do you know what I mean? Because I needed this. Clearly, I needed to leave this trade. And I'm happy I didn't dilly-dally and just got out, because I would be much more out of the money than I ended up being had I still been in this trade, right? So I think, yeah, not a win, but less of a loss. And I think sometimes that's what matters, right? Because yeah, the thing with risk, we were talking earlier with like the 1% rule a little bit as well. You're not going to win every trade. You definitely won't. But if you can kind of minimize the losses on the trades you do lose, it can make your wins that much sweeter.
Absolutely.
Yeah.
Let's get to some questions now. D-Loaf asking a very interesting question. What about direct hedging? You said you wouldn't recommend, example, hedging long-term position in a single equity in a margin account. So with respect to direct, sorry, let me just move it down. Direct hedging, it involves basically taking the opposite position in the same security. For example, if you own shares of a company, company A, you can short sell the same amount of shares that you are long. If the stock price falls, your short position will offset your losses from your own shares. I personally don't see this because it becomes a zero-sum game. There has to be some benefit to going long, and then the other side of it being the hedge, whether it's on an options. See, I would rather do this through options and rather than opening up two different accounts, one going north, one going south. To me, it doesn't make a whole lot of sense because then it will end up being a zero-sum game. Okay? Unless you get out earlier on one and let the other one ride. For example, if it breaks through a key technical level, you end up getting out at one earlier, so your loss on that one becomes smaller while you let the other one ride. That would be the only scenario that I would see that would make sense in that regard. You may have a different approach. If you do, let me know. Always willing to learn, even if I'm the one spitting the teaching today. Now, you can actually do that with options. Now, the thing is, you're going to have to look at the options premium. So if it's more expensive for one side than the other or cheaper for one side than the other, then you may actually be able to make money even if you go long and short, putting a call on at the same time. So you'll have to look at that. But I'm no options expert by my own admission by far. Blackberry, swing trader means you trade over more than 1 day. Typically, there's really no hard and fast definition, but it's 3 days to 3 months. It's anything, a prolonged period of time. Usually you're trading on the daily chart or the 4 hour or the 1 hour, not the intraday 5 minute, 10 minute, 1 minute like we do here on some of our trades. Let's go down, see what else people are talking about. Chris ML and some of the, I don't know what that means. Stop console wars. All information is good information. Appreciate you. Console wars there. Patrick Langlois. I just skipped that. If you were to trade SPX today, what would be your best risk management? Look, I'm not, I don't trade the SPX. I don't think even the SPX is tradable. It's an index. If you're talking about the ES, sure. If you're talking about the SPY, sure. But I'm pretty sure you can't trade the SPX. However, if I were to trade the futures today, I would either just get in at lows and my out would be 5 points or something like that below the low, or I would wait. I'm talking about the NQ. I would wait for a decisive break and hold above that VWAP. Because obviously right now the NQ is finding resistance at VWAP, and so it's very sideways and not really able to break through that level. So I would want confirmation that it's breaking through. Bigfoot, do options wheeling strategy? I have no idea what that is. I'm sorry. Maybe I'll Google it and I'll read it. Maybe we'll talk about it next week. Michael Westrick, risk management again. Are we going to talk about how many shares we are buying and selling for a scalp? Well, what we do is we're going to basically have a weekly topic. Next week, we're going to talk about chart patterns, which will definitely take multiple days. Bear with us. It's the last
it'll be a lot for chart patterns. I'm excited.
Adira's been killing it, making the notes for that. So we'll have a lot more to talk about with respect to going long or going short on the actual trade rather than risk management. But we felt we really needed to start off the teaching segments with something that helps protect your capital. Because if you don't have any money, you're probably not going to watch us. Right? If you blow up your account, unless you're quite wealthy and able to refund it, you're probably just going to move on. So we felt that this probably would be a good place in which to start. SPX options, says Eddie R. Yeah, you know what? Sadly, though, I'm not much of an options trader, so I'm going to have to, refrain from making any comments with respect to options because I just don't know enough. Mike, Sharif, Adira, Been doing this for 20 years and still find value in the learning and refresher. Loving the energy and content. Thank you for the efforts. Thank you for being around, and thank you for your kind words. I do appreciate that. I'm sure Dara does as well, Mike. Keep going here. Keon Johnny. Sell a put and sell a call for SPY. You collect the premium in the high VIX environment 3 months out. All right, very interesting. That's good to know. Thank you for that. Rory Alderson, do you believe market makers pinning options on expiry days so they don't lose money? I know I've heard stuff like that before. I can't tell you one way or another. I just don't know enough. But I have heard about that theory or belief before. G. Hertz, Adara, Sharif, really appreciate this new educational format. No, we appreciate you being here, my friend. Rock, sorry, I'll just keep going here because there's tags. Rock, SPX options changed my life. I now consider robbing banks daily. Fantastic. I hope you become the best bank robber there is and you print. No, I'm kidding, of course, don't do that. Abbas, Absun, Abbas, I think, maybe?
Abs?
Yeah. All right, Sheriff. Buy both calls and puts at the same exact time and price, and when one side breaks, you just sell the losings. That's what I was saying. So that's what I was saying. So if you're going to go long and short, the actual thing, the actual same instrument, whether equity, option, futures contract, whatever it's going to be, what I was thinking was you wait for a technical break of the level that you're looking at, then get rid of one and let the other one ride. That would be the only way it doesn't end up being a zero-sum game. So yeah, I definitely do agree with you on that. Appreciate all the content. Thank you, Duke684. Bigfoot, market makers on options makes money on the spread. They don't care about the highs and lows. Okay, thank you for that. Waiting for your trade, please, says Y Brother. My friend, I've got nothing at the moment. We're still going through the educational content. When something is to my liking, I promise you, you guys will be the first to know, and I'll be letting you what I'm doing.
Yeah, and I mean, like, honestly, the market is in a really weird stage right now. Like, I'm trying to enter stuff, but I don't want to get involved too early. I'm in this Macys trade right now, but I'm basically going to cut it short because we're getting a little, we talked about risk management. We're getting a little, a skosh chop and churning here, and I would like to kind of leave this be. I know chart patterns are next week, but I was kind of thinking this was going to be more of a higher highs, movement to the upside. It looks like we're stalling a little bit, so I'm trying to get out, with a couple cents. Do better than that Nvidia trade.
Is that the 5 minute?
That's the 5 minute.
Okay, so we're gonna jump a little bit ahead.
Let's do it, yeah.
Okay, so this over here, go to screen, please. Ram, thank you. This over here, this is a big move up, and then you have a sideways, not really a sideways consolidation because you're still making higher lows. Yeah. That's what they call a bull flag. And this is a bull flag continuation. So technically, right, I mean, can I go to the one?
Yes, yes, you can.
Okay.
Yeah.
So we go to the one over here, and then I gotta zoom out so I can see this a bit better. Yeah, a lot harder to see on the 1 minute. So the 5 is probably the most appropriate here. This is what I would call a bull flag continuation.
Okay.
You get a big move up, and then basically you have like a flag forming. Now sometimes they're a flag because it's horizontal. Sometimes it's a pennant.
Oh yeah, I was reading about pennants this morning. Okay, that's interesting.
So yeah. Yeah, go ahead. Sorry to
yeah. So anyway, so I appreciate that. So I was gonna get out of this trade. So I'm gonna stay in for now because we have a bull flag and or pennant. Go team. But yeah. So basically, like team pennants. It was a dumb joke. But also Andrew Chow in the chat earlier I saw saying excited for chart patterns next week or something. I forget the exact wording of the quote, but I'm also excited. So anyways, clearly we're excited. We got ahead of ourselves. But yeah. So in terms of risk. Basically, I'm kind of deciding, probably get around this 1405 mark, which is where we kind of started to peter off. If we don't do well, because this one, it's near higher of days, so it's a little bit harder to kind of gauge our exit point. I'd like to see us eclipse this 1435 wick and then decide what we want to do from there. But yeah, keeping our options open, having risk in mind in terms of my points of exit, and just, waiting and seeing. Yeah, with regards to... we're talking about position sizing as well, right? Or hedging strategy, kind of all of the above. Yeah, I think with position size too, it's one of those things where I might, in this one, want to take out part of my position early because I like to, I like to have the beak wetters. I like to clinch profits while I can, especially because I find sometimes for myself, I'll have an issue where I'll try to overstay my welcome in longer term trades, which is why I prefer scalping. So it's nice to kind of have that option of, you know what, like definitely having profits, securing the bag before it's too late, and then running away with it. You know what I mean? So that's kind of why I like piecing out my trades with regards to position sizing. I think it's not, I think also, I've been talking about this all week, but I think there's some kind of, there is a symmetry between risk management, minimizing risk, and also maximizing your profits. Because if you have, you know, where you want to take out your profits in mind, then you're also working towards that as well, right? So in addition to making sure you don't lose more than you need, you can also make sure you can gain as much as possible, which is why sometimes what I like doing too is, usually more when I do range trades, I like to set a specific out the second I get into a trade. So if we even get a wick into that, I've got it. I've clinched the bag, I've secured the bag, and then I'm, you know, running away from the trade, right? So I think it really depends on the trade as well. Risk management, it's definitely not a one-size-fits-all approach, but yeah, I think it's really good to have in mind kind of what you want to do. Not just thinking about it, oh, I'm going to lose the trade. Think about risk management also as, how do I make the most when I win the trade? Yeah. Do you know what I mean? If you win the trade. Also, Dad Trader, are you green today? I've only had the one trade right now, which was the Nvidia short. So that's a decided no. But I appreciate the question. But you know, this Macys, the day is still really young. We're 11:37, right? Yeah. We've got more time to make more trades. So that is an update there. But yeah, I think basically, you know, long story short, I think risk management is less scary if you also view it as protecting your profits and your investment.
Very good question from Daniel Boo. More of like a statement / question. I've been trading for 2 years and my account growth looks flat. No big gains, no big losses. In this scenario, how do you find motivation to still trade, my friends? I gotta, you know, really take my hat off to you. Good for you for having the longevity and the commitment to keep going despite not seeing the desired results. What I'd say to you is what I've heard anecdotally. I don't have the data to support this, but what I hear from a lot of the people is, you know, year 5, year 6, it gets a lot better. I mean, you really need, I've been saying this all week, screen time, and you guessed it, more screen time. It's just about being able to see the chart patterns, the repetition, seeing it over and over and over again, knowing how to anticipate. And then it almost becomes like, you know, you kind of have a feeling what the market is going to do, and then you work off, you know, those levels. You know, I really don't have anything more to add than that, other than the fact that you just really need to give it more time and practice more. Obviously, look at you know, maybe what you're doing wrong, uploading your data to websites, seeing and helping you to kind of digest where you're strong, where you need more work. You know, I've talked about this several times this week. These websites that kind of spew out data to you that you didn't even know was relevant, like what time of the day you trade the best at. Is it the open? Is it the midday? Is it the close? Is it power hour? What is it? What price stock you excel in? What sector? Etc. And all the different data points that you can really imagine, they kind of give that to you, and you know that might help you, pardon me, narrow a little bit and see where you're excelling, and then to focus more on those setups rather than you know, just taking trades willy-nilly. Yeah, and you know, you always hear traders talk about waiting for that A+ setup. Well, that doesn't exist in a vacuum. What is this A+ setup, and how does a trader know it's an A+ setup? It's because that likely have looked at their data. They've likely had a lot of screen time to analyze over and over the years. So I hope that helps. Let's just go on here. Let's see what people are asking. The Hayes records, it takes more than 2 years for a lifetime payoff. Agree. Shout out to the Hayes. What do we got here? Chris, RML, not just screen time, needs coaching. You don't learn a ball game by bouncing a ball about. Wait, I bounced the ball about and I play basketball. No, I actually really suck at basketball. I gotta tell you the truth though, man. I ended up becoming really good at football because we played it at recess.
American
every day.
or
American.
British?
Okay. Both.
Sorry, I wanted to
I played soccer and football, and okay. Hence why I love both of them. I was a running back, but back then you had to play both sides. So I was a safety and a running back, kind of the same size position too. I was a right wing attacker, right wing forward, whatever you want to say, winger in soccer. And the only reason I actually joined those sports because I played them in recess over and over, and I was actually a lot better than some of the people who had been playing for years in organized sports. So I don't know if I necessarily agree with that. But yeah, I do respect your opinion. Let's keep going here. What else we got? What are you looking at over there? What? No, your friend over there. Oh, there. If Sharif was a good safety, I don't know how good he was, but he couldn't cover me, and I didn't play football. Hate.
I like the hates on the end there too.
We're gonna hit this.
You're gonna remix?
Everybody knows that safety is not a corner. Safety is exactly what it sounds like. They are safety. Huh?
What are we talking?
Man, I would have lit you up, man. If you put your head down, I would have dropped my shoulder right into your chest, man.
What?
Yo, you can't cover me, bro. I'll tell you this right now.
I don't need to cover
Straight
you.
up.
I'm not a corner.
Straight up. Doesn't matter. I didn't play football. We get out there. Katina can be the quarterback. I've seen him throw. He has accuracy. No, he's a QB. We go one-on-one. I'll light you up.
Honestly,
We'll put it on. We'll put it online for everyone to see, and we'll just do what's up. Let's go.
Everyone loves this. I love it. I love it. I love it. Who could complain about working here and like the trolling and the back and forth banter? This is what I like.
Dreams are made of.
This is why it's easy for me to get up in the morning, straight up.
Same, yeah. It's
Straight
like
up.
such a good community, especially someone
Yeah.
who's still like very much learning. Everyone's so patient with me and willing to talk the market with me.
Absolutely.
And then we troll each other for good measure. So you know what? Perfect workplace, no complaints. But yeah, I mean,
Yeah,
in terms
go ahead.
of risk with myself too, to kind of mention is I think sometimes knowing what stocks you like to trade is also maybe a way, you know, of risk management. Like we're talking like get a sense of what you like as a trader, get a sense of what setups you like. I also think knowing what stocks you like and how those stocks move is really important. I trade a lot of Eli Lilly. I trade a lot of Netflix. I say a lot of Eli Lilly. I started trading Eli Lilly last week, but like the point remains, I've traded a lot of it since I started trading it, right? A lot of Tesla, Nvidia, and mind you, these are all really like stocks that kind of do their own thing 21. Like they're very, you know, unique stocks, but the more you trade them, the more you get a sense of how they move and kind of how to set your stops and your, you know, your stops, your outs, what have you. Because the thing is too, is we were talking about this yesterday, and I'll see what Eli Lilly is doing today, just as an example. But if you look at the candles, that can kind of help you set your stops, right? So Eli Lilly this was like the 950 candle, ranges from just above 588 to 591.50, right? So when you're setting your stop loss, you have to keep that in mind and set a wider range, because this is, you know, obviously a stock that moves a little bit more. When it's a penny stock, you're talking literal cents, right? So you're going to set your stop loss a little bit differently, I think. And I think the more you get a sense of how each stock kind of moves, the more you're able to trade it and also keep risk management in mind while you trade that stock. So Eli Lilly, the volume is not there for me today, so unfortunately I will be saying adieu, sayonara, adios.
Hola.
But yeah, I maybe not Ola, not today.
But the anti-Ola.
Right? But yeah, so anyways, the point I'm trying to make is I think the more you get a sense of how a stock moves, how quickly it moves, in what kind of, you know, is it going to move dollars like a Tesla or Nvidia? And then you have to be really prepared and on your toes, doing ballet on point, ready to move. Or is it a stock that moves a little bit more slowly and you really have to be prepared for the setups if you wick into your position, like an Eli Lilly, like a Netflix? And so I think part of risk management is just really like, honestly, trading and figuring out what you like and what you don't like and what works for you, because then you'll be more prepared when the stock tries to give you, you know, a 1-2 punch, you're ready to like fight back.
Very well said. Very well said. I would want to comment here on someone with the Angel Fonseca. Look. She says, I feel so defeated on most days. I want to give up, but at the same time, I have never given up on anything. I promise you, this is not one of those things where you can just become good in a couple of years. If you can, you are a prodigy, and my hat is off to you, and I need you to teach me. But like I've been saying all week, repetition, repetition, repetition. And anecdotally, I don't have the data to support it. My understanding is, you know, year 5, year 6, it really does get a lot better. You know, the Katina man's been trading for 20 years. The Neil, same amount of time. That's not by accident, you know? I mean, tenacity and consistency, right? Showing up every day, taking the punches in the face, getting up again to fight another day. But one of the most important things, risk management. You gotta have the money to be able to trade. If you give up, If you blow up your account, you're not going to be able to stay in this game unless you're wealthy and able to up the account, or if you're working and able to reload it. You get what I'm going with here, all right? Let's get to some tags because I missed a lot of that. D-Loaf says, bruh, we almost played the same positions, winger and right back in soccer, cornerback, returner, kicker, second running back in football. Shout out to D-Loaf. C2, can you ask A-Train from the boys, Neil, how fast he really is? Neil, you got a question over here. Someone called you A-Train from the boys.
That's a really good costume.
Yeah. They want to know how fast you really are. Before he answers, I should tell you that he ran track in high school. So you.
Oh, so did I.
He ran 10.8 in the 100.
And like 22.2 in the 2.
And 22.2 in the 200. So there you go.
That's not that. I was a better hurdler.
That's pretty fast, though. 22.2 for 200 is pretty fast.
He says he was a better hurdler.
Hurdling is hard.
It's very hard.
Like the thing about that is like that's fast. That's fast versus like other normal athletes. Like in real track and field, like I got my ass kicked. I was in a 60 against a dude who ran for Canada in the 4x1. One of the guys that won the gold medal back in like the 90s, Robert Esme. And I'm lining up in a 60 against this dude, and I was a really good starter. And all I remember is like after like 3 steps, I was like, what the hell just happened? And it was ridiculous. Like the guy, they're just on a different level, man. Like he's all jacked and shit. He's got abs coming out of everywhere. He's probably on steroids or something. But like those dudes, like those guys to me is like myself to my high school buddies. Like they're ridiculous. They're on a different level, man. It's like track speed right there. I saw someone say they ran 4.3 in this chat. Hats off to you. Like that's pretty, like that's no joke. Like 10.8, that's about a 4.4 speed. But I never really trained for, you know. Like, also track 40s and football 40s are different because in football you get a rolling start. Like tracks, anything a track guy runs, take a couple of tenths off because football they cheat on the 40 by starting the clock whenever. You have to react to the gun in track. That's why Usain Bolt could run a 4.0 in a football 40, but he'd run like a 4.2 or something in a real 40. Anyways, that's enough.
I didn't actually know any of that.
That is very interesting.
Very. Stockloom, what's your opinion on insider trading? I see all the technicals and the fundamentals fail when some insider buys or sells shares. Any reason why you guys don't track congressmen's trades? Well, I do. I have 2 subversive ETFs that I call them. I have the Ted Cruz and the Nancy Pelosi. I follow what they do.
Really?
Well, yeah.
I did not know that. That's very cool.
I have them in my ETF watch list. Look, I don't think you mean insider trading. I think you mean insider buying and selling because, well, unless you do mean insider trading. And, you know, obviously insider trading is illegal. Whether or not you're actually caught is an entirely different story. But I know that the SEC under Gary Gensler has become much more activist in that. So has the Department of Justice with tracking what they term to be suspicious buy and sells. Look, I do. We also get news updates on a particular stock when there's insider buying and selling. So, for example, you'll recall after the big earnings report that Nvidia had last time around, Jensen Huang was offloading some of that. We knew about that when Elon Musk was selling shares of Tesla to finance his acquisition of Twitter, now X.
Oh, God, yeah.
We knew about that. We were told about that, and we saw Tesla sell off for days and days in a straight downward, down into the right line. So we do follow it, but you know, when you're a technical trader, you have to decide, am I gonna be a fundamental investor, or am I gonna be a technical trader? You're gonna have to make the choice. I talked about it yesterday about how it's hard to overlap the two. A lot of people like to invest fundamentally, but to choose how to get in to a stock using technicals. So there is a bit of overlap between them, but I think if you're going to intraday trade, fundamentals have really nothing to do with anything unless you're trading on earnings. And yeah, that's what I have to say about that. Moving down, Crispix. Did you also mention how flag patterns can make a measured move, the pole if it breaks down, or being up being a target measure? Yes, we're going to get to that. So I know exactly what you're talking about the length of the initial bull flag. If you get the continuation, it's supposed to be the initial length, or supposed to be the continuation, is supposed to be the length of the first initial move. That's for next week. We're going to talk a little bit about that next week. Let's not get ahead of ourselves here. Let's keep
all the
moving
patterns
on.
will be covered next week. Not to worry. So many
We're
patterns.
going to try to get to the at least like the majority of the good ones.
Yeah,
right?
there's so many. That's my whole thing when I'm trying to make the notes. But yeah, don't worry, guys. If it exists, I have probably thought about it and taken some notes about it.
Yeah.
Because I'm dedicated. So I'm very excited for next week.
The Hayes Records goalkeeper trading taught me to position myself at specific spots where I cover the angles of the post. Absolutely. I like to believe I apply that to trading. LOL.
Oh,
well, I don't think that's
like
such a
that.
bad analogy.
That's a really cool
Yeah.
analogy.
Because, like, you know, goalkeepers for soccer, like, they have so many different things they have to learn. They have to know when to come to challenge the attacker and try to make themselves big so that they can kind of block the angle. You have to, on corner kicks, you have to know where to stand. On free kicks outside the box, you also have to know where to stand, et cetera, et cetera. So I do understand what you're saying about that. Diamond Realty of Miami, my man is back, and he's active in the chat again. Best show on YouTube, 305. Member for 17 months, baby. That is a while. There we go. Very happy about that. The Katina man has now taken Tesla short 236. He's looking to take that bad boy south as it is up 1/3% right now and showing an unusual amount of strength given all the other names are weak. And he is suggesting that this one is going to be weak as well. And it's almost $2 in the money.
I'm
on
$1
that
in the
one.
money.
Shout out to the Katina man printing, and he's getting ready for that weekend because I'm sure he's getting ready for the podcast. By the way, we mentioned it on the top of the show. We're going to mention it again. The Katina man and the Brendo this week on the podcast. Next week it'll be the Neil and the Brendo, and then the week after that it'll be me.
Oh, exciting.
Right, so we'll have to see how that one works out, but I'm ready to talk up a storm. You guys know how much I talk and how much I've got to say. So, Ryan, learning to ice skate, play hockey is the closest comparison I have to learning to trade. It takes a lot of failing and getting back up, but in the end, it's worth it. I can't say I empathize with you because as a Canadian, you're basically thrown on the ice and told to skate from a very young age. So
You're like Bambi. You're just like sliding there, like they slide you out, and you're like
exactly right. So I've been skating since I was a little boy, and like I can't even remember like 4 years old or something like that. So yeah. To me, it was just like second nature. So
Yeah.
But I do understand what you're saying, and I sympathize with you. All right. I just want to mention one thing before I send it to Adara. We have been doing this dance with no pants on the NQ and the ES at Vwap, but we are now putting in higher lows. It's been 1, 2, 3, 4, 5, 6 rejections at Vwap. The market can't seem to clear Vwap, whether it's the NQ or the ES, but we are coming into a bit higher highs. Now look at all these higher lows over here, 1, 2, 3, and 4. And if we really start moving here, we start knocking on the door of 59, or our closing print, which was just south of 59 yesterday at 15,897, we could really get going here on a Friday. I mean, I personally wouldn't mind it, given the long-term portfolio is all long, and I'd love to print to the north side today.
Yeah. So first, I saw a really sweet comment from Stop Console Wars. Listening to you two talk stocks while making pancakes is so peaceful. Thank you. High five. Enjoy your pancakes. That sounds lovely, and you know we're very happy to be a part of it in whatever small way. My second point is I am also short Tesla, albeit at not as good of a level as Sean. I did not get the 236. I am just around that 235.30. We did take out part of the position, as I am wont to do, but and want WONT before people get, you know, about grammar, it's a different want. But yeah, so honestly, we know I don't like to be in positions too long. I like to, you know, get in and out, like stealthy, like a ninja, in and out of the position here. I might get out at 234. That being said, I think Tesla can go farther. So I might, you know, I'm a little bit hesitant to take out the rest of my position here. Also, why I chose this level, this 235.6 or 234.6, sorry, to get out part of my position, is because that's what we were seeing this kind of resistance earlier, right? I like to look at the chart and I like to see like where are we kind of seeing resistance or support, and those are the levels that I like to plan my exits out of a trade, right? So yeah, so that's what we're doing right now in Tesla. We're chopping and turning. I like where I got in, although that 236 level is definitely much better. But you know, I'm just happy I'm in the short, happy to be invited to the party. Let's see how the party gets going. In terms of risk management, if we get above that 236, I am probably out. But truthfully, I'd like to be out before we can even go to that point. So yeah, so we're gonna wait and see here. And yes, I'm aware, I'm seeing some mentions in the chat. I know we went from red to green. I know we are up in the day right now. But if you look at this, it looks so retracey that I was kind of like, if I see this, you know, I kind of want to dip my toe in, right?
Yeah.
Especially because, like I said, I honestly like to be, I do not like to be in positions that long. The closer we get to 234, the more I'm like, we might cut it off there. Also, just a quick update on the other trade, Macys. Yeah, I think you're right about like the pennant kind of here in Macys. We're still hanging out in Macys. It does not look like it's going down anytime soon. I'm gonna wait here. We're also within like 2 to 3 cents of my point of entry always. We have not moved that much, so I'm happy with this trade. Yeah, in terms of risk management too, I guess back to talk about the Tesla trade, because you know we're trying to bring things back to the theme here, right? So the reason that I got out, like I said, looking for areas of support, also position sizing. I only have half my position left. So as this gets a little bit dicier, we're seeing these smaller, tighter candles, right? Like we have the wicks, but the real bodies of the candles are a lot tighter. That's why I'm happy I only have half my position. I didn't have much of a position size in this one to begin with, because as I mentioned, this is a bit of a riskier trade, what with it being 30% positive on the day, and we did have this crazy movement earlier. But the stock moves like crazy, and if you're gonna just kind of scalp and go in and out, I honestly have no problem. When I say you, I mean myself. If I am just going to do that, then I'm okay with this position. We have had such a hard time breaking back above that 235, so I'm just gonna chill like a villain for now.
All right. Kyle Burdett, ask the chat what their age is and if a full-time or part-time endeavor. I'm 42 years old, have been self-employed my adult life. This is a transition to my next phase of self-employment. I wish you the best, Kyle. Obviously, if you wanted my opinion, I would say take it slowly. Make the transition gradually. I know you're a hell of a futures trader. I know you're short biased, but I just take it. Yeah, just take it one step at a time is what I'd say. That's personally what I did. Obviously, I had a previous career before jumping into this. I'm still running a business, so I have to run this. I have to do this at the same time, and it helps keep the boat afloat, right? So that would just be my suggestion to you. Thomas Johnson, got a 5-minute green candle above at Vwap. Yes, hence why we're involved now in the future. We're long at 43s. We're printing at 73s. We're about 30 points in the money or so, but it's still a risky position. No bones about it. The market was very consolidative. I needed to see something north of Vwap really here to get me excited. We're going to see it now. It looks like maybe we move into 15.9. Maybe we don't. We have a bit of a triple bottom there at 15.825. We'll have to see. We'll have to see. All right, let me see. Fat figure. We don't offer advice. Why not? Chalk. Sharif age fluctuates between 30 and 45 depending on his beard. Sorry, I spelt your name wrong. Man, it's this hair is getting out of control. I gotta tell you, I want really to grow it out, but it's a lot of work, man. Anyway, 71, still a newbie. 52 and work every day. Part-time is the way to go. Shout out Chef Joe. 6 years old, still learning, says Gabrielle. Awesome. Klopp, Jurgen, what up? Did you see Everton were just deducted 10 points from the Prem for what? Financial fair play, FFP, I'm assuming that's what that means. When City have 115 breaches, sorry, this is on topic. You are more than welcome to tell me about the Prem anytime you want. I can't believe that. I'm going to have to go in and look myself.
Look at that.
Yeah, no. Everton, there we go.
Also, Man U was trading higher today.
Yeah, well, apparently there's something going on over there.
Yeah,
Everton
there's like some
in the
stock
news.
deal.
Yes, he's right, The Guardian. Everton deducted 10 points by the Prem. Oh my, and they don't even have that many good people on there. Who are they paying? Dominic Calvert-Lewin? Who are they paying? I want to know. Wow, that is interesting. Yeah, and City should have been absolutely smacked with that last year. I know that was something I was following, obviously, because if they had points deducted, Arsenal would have won the Prem.
That's Man City, right?
Yeah.
Yes.
Man
Okay.
City.
There we
Yeah,
go.
yeah, yeah.
I know a couple team names. Yeah.
Shout out to you, Klopp. Kyle Burdett, another little point there. Thank you. I am looking at remaining in business for the next 3 to 5 years as I actively day trade. Having the business and trading provides benefits to both. Can't agree more, my friend. Shout out to you, and I wish you all the best. Believe me, I really do say that from the bottom of my heart. Why 5-minute candlesticks and not 15? Says Baban. There's no hard and fast rule, my friend. You want to trade off the 5, you want to trade off the 15, the 10, whatever you want to do, just make sure it's consistent. I told you about this earlier. I talked to Steph last week. We were talking in the kitchen. She's a futures trader on the floor here. I was talking to her. She's like, look, I chart off the half, the 30-minute, and I get in. I enter off the 5. So there is no hard and fast rule. It's whatever that you are, setting up your system around. You know, the Katina man, he likes to look at the 3. You look at the 3, don't you? What do you do over there? You're on the 5 or the 3?
For what?
Your entries.
I have 1, 5, and 20.
He has the 1, the 5, and the 20.
What else is important?
And the daily. The daily I couldn't agree more on, because that's where you're going to know where the critical levels are. So shout out to you on that. Let's keep going down here, see what everybody... Reliable, haven't heard much about oil today. Let me look at what oil is doing. Oil's up 3.41%. So after getting smacked in the face yesterday, it looks as if maybe some strategic petroleum reserve... what's it called?
SPR.
Yeah, no. I'm saying to add to the strategic petroleum reserve, because they've been running out. Stock Loom, I'm an Arsenal fan. Woo! We good with you on that. Speaking of Arsenal fans, Adam DeLuce, English top flight clubs are permitted to lose £105 million over 3 years, and an independent commission found Everton's losses, in 2021-2022 amounted to 124.5 million quid. Thank you for that. I do know that they actually do get fined if they lose money. If they go into administration, I remember, who was it, Bolton or somebody like that. Was it Bolton or Wigan? I think it was Wigan. They actually were in bankruptcy court, and they got put in administration, and they lost a whole bunch of points. I do remember that. Thank you for that, Adam. Zion Lala. Thoughts on Nvidia earnings? I think we should hold Nvidia until after earnings. It's not taking out the $500 prior to earnings, but once in the pre-market. Look, it's going to be a tough one here with respect to Nvidia, because I just feel like so much of it got front-loaded. We're going to have to wait and see. Let's keep going down with the chat. Magic Mike, I love that name. Watch out. The volume on the 30-minute candle on the triple Qs and SPY. What is going on? We're pumping, my friend. That is the hell that is going on, and we're going to wet our beak.
I'm clapping against my own interest here because I'm short.
We're going to wet our beak through there. What do we have? We have a 40-point winner right now on the NQ. We're going to let this one run a dare.
Yeah, I mean, I wish we wouldn't, because we're in the Tesla short over here, all sad. But you know what? It is what it is. We're still fine here. Like, the more I see that we cannot decisively break over 235, the more I am sipping on my hypothetical matcha and just watching this one kind of bleed. I will say, getting a little bit nervous at this inability to have a decisive break that's not a wick below this 234.50 area. So that might be where I yank out the rest of my shares. But that's where I think risk management with position sizing comes in. I only have half the position left right now, right? So it's like, I mean, obviously I'm still, stressed. Like, the emotional component's always going to be part of it. We were talking about this yesterday. But I can minimize the emotional anguish of my trade by having a plan, because I know if we break 236 decisively, I'm outie. I guess
Howdy.
A weird word to use when I'm in a Tesla trade, but, c'est la vie. I will be exiting the trade. I'll be getting in that Cybertruck and getting out of Dodge. That's another car name. But basically, yeah, this analogy is getting away from me. But yeah, so basically, because I have plans, because I paid a lot of attention to intraday levels, I know, you know what I mean, kind of what I'm doing here. So because, back to risk management, with hopefully less analogies now, is the point I'm trying to make is if you have a plan, you can kind of be less anxious in a trade, even if it's something that moves as in such a volatile way as Tesla. Because I have my levels, I know what those levels are, I know that we are seeing a bit of a downward trend, at least I know we're still positive on the day, but you know what I mean, it's a little retracey. So just having those levels in mind, having a game plan, I think can help me minimize my risk. Also, Pranaya, what was your logic behind entering at Macys at 14.24? I'm going to be quite honest with you. That was one that the levels I should have paid more attention to. I entered where I did, though, because we were noticing. So basically, I wanted to enter around here, but I wanted to wait for another green candle. So once we had our second green candle, I got in at the bottom of this candle here. And I got in. I mean, I can answer why I got in the trade in general, because we did have this movement to the upside. You know, Sharif was explaining, too, it looks like a bit of a bull pennant on this one, just because we have had that movement to the upside. We're cooling off a little bit, but we have not really decisively dipped below 1420. So I'm going to stay in here for the time being, chilling like a villain. But yeah, I think definitely the Tesla trade, I think I planned the levels out better, but also Tesla moves faster. Do you know what I mean? So it's like kind of what I was mentioning earlier is it really depends on what stock you're trading as well. I think I spend a lot more time trading mega caps, so I'm kind of more comfortable looking at the levels in something like a Tesla. Macys, I know these tend to usually run a little bit slower, so as long as I'm kind of comfortable, I'm entering in the quote-unquote right direction that the stock is moving at this moment, I feel comfortable just kind of hanging out and vibing here. And I have it, I was mentioning, I think, to Blackberry on the chat, I do have this on my side chart. So watching it like a hawk, watching Macys very carefully. But yeah, I mean, I think as long as you're kind of aware too, because stocks can move like crazy, trades can move like crazy. Also, I want to mention Nvidia as well too, and I'm only mentioning Nvidia. A, it's moving, and B, we were talking too about how some indicators impact different stocks differently. We actually had this conversation off camera this morning as well. Like NQ earlier today, I don't know if it still is, but definitely interacting with Vwap. Nvidia today, absolutely interacting with Vwap. Like we're having all these swoops around Vwap, and now we've swooped back up. I think if this one breaks this earlier point of, I was going to say high, but I guess it wasn't even, it was just, a little peak here. If we go over that peak, around this 495, it could be interesting. But yeah, basically the point is like you can use different indicators to look at your risk and your point of entry as long as they're valid for that stock. Vwap right now is valid for Nvidia, I would say.
All right, let's circle back now, guys. Let's go back to the first thing that we started with, because again, we have a lot of people joining midday, so we need to kind of reiterate some of the material that we went over. We started today by talking about the 1% rule. Just you can stay on my chart, Ram. The 1% rule. Successful traders don't look to risk any more than 1 to 2% of their account on any one trade. So if you have $10,000 in your account and you're risking between 1 and 2%, this means you're looking at $100 to $200 of risk per trade. What the hell does risk mean? Well, it means the amount of money that you're willing to lose. And that goes back to what we talked about earlier in the week with respect to stop losses, stop placement. So if you can't just place your stop willy-nilly, we spent 3 days talking about stop losses. So what does this all mean? How do we amalgamate it all together?
Amalgamate it,
yeah. If you want to risk between $100 to $200 per trade, but you have to have your stop at a minimum at a level, like for example, a very clear support level, like the triple bottom today that we've had on the triple Q, on the MNQ over here. Look at this. Basically this area, if I got in, this is where I would have been putting my stop through the break of 15, 8 and a quarter, right? So if I know that that's where my stop has to be, then I have to size in appropriately here at wherever level I'm getting in, so that if I get stopped out through that 15, 8 and a quarter, it is no more than $100 to $200, okay? Depending on whether I'm risking 1 to 2%, okay? I hope that that's very clear. Your stop can't just be placed at a level where you risk $100 to $200. No, you have to adjust your share size so that it corresponds with where the stop needs to be, okay? So I hope that that's clear. If it's not, please let me know, and I don't have a problem explaining that again. By taking small trades, you will not blow out your account with 1 or 2 losing trades. Taking additional risk, though, can be dangerous and detrimental to your long-term chances and your long-term profits. Part of being a good market strategist is to be disciplined and stay cold with the numbers. Yeah, stay chilly, baby.
Frosty, icy.
Yeah. Oh, and I gave you guys an anecdote yesterday of when I started trading. I threw stuff at glass. I punched doors. I yelled.
There were a lot of specific examples. Yeah.
Yeah. There was a lot of frustration. No question about it. That's the truth. Okay. Going on, as mentioned, it's impossible, obviously, to win every trade. Nobody does. But if the ones that you lose are only 1 to 2% of the account, then the account has a much higher probability of surviving. The 1% rule can be adhered to through careful consideration of trade size and obviously using a stop. That's just what I finished talking about now. And I just absolutely got that print there at 15,895. We're well in the money on this one, about 50 points or so. As we reject, guys, we're at a very important level here on the NQ. I digress, but I have to mention this. This is yesterday's closing print. You know how much I respect closing prints. 15,896, and look at that wick. Comes to it to the T, and now we're 10 points lower. So that's an obvious resistance level. Keep your eye on this level as we finally take VWAP. VWAP was obviously the resistance level all morning from basically 9:50 onwards till about, let's say, 10 minutes ago when we actually got a closing print above it. Now we're looking at that 15.9, 15.896, 15.897 from yesterday, which is yesterday's closing print. We're right there. So keep your eye on a big possible retracement as we dance up to those levels. So that is the 1% rule. A bit of an overlap with that, guys, is position sizing. I mean, I just finished going on how you shouldn't use more than 1 to 2%. But what happens if you have a monster portfolio and you're a trust fund baby?
Yeah.
And your dad gave you a couple of $100,000 to play with?
Yeah, what happens if you're a character on Succession or Gossip Girl and you want to day trade? Like, you know, then you just really have to make sure you're taking smaller sizes, depending on the size of your fictional trust fund.
Right.
But yeah, I think so. I can talk an example for Tesla. So I'm in this trade. I love taking out, I mentioned this earlier, I love taking out parts of my positions, like early. So this one, I'm happy I got it where we did because we almost got bottom wick here for about half the position. So I got out half around this 235.60. Why? Because we were noticing this was kind of earlier an area we were chopping and turning around. So I said, if we can't get any lower than that, I at least want to get some profit there. But I still want to stay in the trade because I do have faith that we could go a skosh lower here. And we're still, you know, we're having a really hard time having a decisive movement above 235, so I'm going to stay in. I think part of it, too, is evaluating, because that's not to say that just because half my shares are safe and in profit land and in, you know, the peak wedding zone, that doesn't mean I want to waste the other ones, too, right? I still need to evaluate. So if I'm seeing we're having, like, you know, we still have, like I said, I'm getting out if we go above 236. But you know, I still have this in mind, like, let's say we can't get any lower. Let's say we continue this chop and churn around this 234.90, 234.70. Then I might want to take these out earlier. But A, we still have profit, and B, we definitely still have protected the other shares in the first place, right? So I think you still have to evaluate. Like, having a smaller position size, I would not say is, you know, an excuse to just like, oh, it's okay, there's only this many left, right? But I think it does help a little bit ease. You know, we're talking about emotional management as well. I think it'd help you, too, with emotional risk management because you know that you do have less shares in the line. But that being said, because you have less, you know, it still matters how you use them. So that's my roundabout approach to position sizing with this Tesla trade as an example.
I respect that. I just want to give a shout out to my sister, by the way. It was her birthday yesterday, and I forgot to shout her out. So this is me and my sissy over here. Where does it go? Come back, Ram Ram. This is me and my sister who moved to California, by the way. So, you know, too bad I don't get to see her as much anymore, but I just want to shout her out. And she's old AF, so she's 7 years older than me, 6.5. But who's counting there? Yeah, she's a 75 baby. So shout out to her.
Happy birthday.
Yeah. Quickly, let's go on to the next topic over here. Adair, if just allow me a minute to load my, where the hell did it go? What's going on?
Hedging.
Yeah, I don't know where it went. Oh, it's the Instagram one, that's why. Instagram.
I do that where if you have multiple tabs open, it's so hard to find like one of them because it's like if they're in the same, yeah. Gotta love the internet.
Oh, look at this, Hertz Scrambler. She looks a lot better than you. Thanks, man. I appreciate you. That's nice. Very nice comment there. Thanks for that. Let's go on to the next topic over here. Position sizing. All right, position sizing refers to the process of determining the size of a position within your portfolio, or essentially the number of units of a security to buy and sell. It plays a critical role in the risk management as the size of your position can significantly amplify or reduce the potential risk or return. So in this case, we're going to talk about 3 different, aside from the 1% rule, obviously, which is a maximum. We're going to talk about how to approach position sizing, fixed position size. This method involves trading a set number of units, whether it's stocks, options, futures contracts, what have you, every single time. While it's straightforward, it may not be optimal for managing risk. I think you can probably understand why. I wouldn't want to punch in 500 shares on Nvidia in the same way that I could get that on Intel. Intel, much less volatile, much more stable than Nvidia. I think you can understand the risk I would be putting on if I was to do that on Nvidia, whereas, you know, it's still risky, obviously, putting 500 shares on anything, but Intel, it will be a lot more stable, and you just need only look at the chart to understand why. So that is the first one, fixed position sizing. I also gave the anecdote first time around when I explained this about, you know, how my platform doesn't allow me to get out certain percentages, so I'm forced to actually have hotkeys with respect to the actual amount of shares that I want to get out. So if I was to have that percentages, obviously that would be a lot easier for me. But in this case, you know, I'm going to have to, you know, I had to actually have hotkeys for, like, say, getting out or getting in 5 shares, 10 shares, 15 shares, etc. So shout out, yeah, she's a dentist. That's why her name is Dr. Dina. It's because she's a dentist. Which a fake doctor though. Let's be real about it. Yeah, of course.
I mean, it's a different. Yeah, I guess that's. But it's definitely like different than like if like you know like people who have doctorates, like you know like people like archaeologists, right? I said that word so weirdly.
Yeah, archaeologist.
Yeah, archaic. I don't know what I'm doing with my life.
That's all right.
But yeah, no, like I think like dentists, like you're still operating on a person. Do you know what I mean?
I don't wanna like let her head get too big.
Oh, it's a sibling thing. Okay, there we go. There we go.
All right, guys, going on, second type of position sizing strategy we call percentage risk. Essentially, this method involves risking a predetermined percentage of your trading capital on each trade. Very similar to the 1% rule, but that is a maximum rule. I'm talking about, you know, not maximum, just actually taking it in on a per trade basis. This ensures you never risk more than you're comfortable with losing on a single trade. So if you have 100,000, when we talk about the 1% rule, that's just for one, that's just your maximum. In this case, you may want to risk 0.25% on your account. Whatever it is, stick with it. Whatever your budget is, whatever your capabilities are, whatever your the net value of your trading account is, base it around that. It's going to be very individually specific. So I'm not going to give you any numbers, obviously. And then the third and final one is percent volatility. And this is the one that I subscribe to the most. And this basically is determining the amount of shares, options, futures contracts, what have you, based on the volatility of the instrument that you're going to trade. I would not, and I gave this anecdote earlier, I would not trade the same amount of shares on Nvidia as I would on Intel. They do not trade in the same way. Intel, much less volatile, save and except for yesterday, obviously, when it was up 6%.
Was wild.
But that was an outlying day, was the exception, not the rule. So that's what I have to say about that. With respect to percent volatility, this method adjusts the trade size based on the security's volatility. A more volatile security would lead to a smaller position size. It's just normal, while a less volatile stock would lead to a larger position. Now, it should also be mentioned that price probably plays a role in that. So when I get into a small cap gapper, for example, that's not halting umpteen times in a day, I would likely have to size in a lot more, especially if it was a sub $1 stock, right? In order to actually get any net proceeds out of that. So you may have to punch in 1,000 shares. You may have to punch in 2,000 shares for a 25-cent name. So you have to take that consideration in as well. But I would say the volatility of the security, the volatility of the instrument is likely to be the guiding factor here in position size. That's if you want to be able to manage risk properly, Adair.
Thank you. I think with regards to risk management too, it's like, you know, being ready, being on your feet, being on your toes. And like I said, you know, this Tesla position is slightly less stressful because I only have half the position still here, but it's also still stressful because we did have a little bit of a, you know, a run up for a moment there. We were kind of flapping our wings to the upside. Now we're pulling back a little bit around my point of entry, but this is another time where, you know, I've kind of adjusted. Now I want to get out a little bit earlier than I initially planned on doing. So if we can make it back to 235, I'll be pleased as punch. I'll say goodbye because we want to still protect whatever profits we have, right? And now, you know, this could also be a way of me minimizing any potential profits by getting out there instead of waiting for a stop loss. But you don't want to like lose everything either, right? I think it's also like a personal thing. Like I said, I think for me personally, part of risk management, especially as someone who struggled really early on with pulling my positions out too early or staying in losing positions too long. I think part of it too is for me knowing when the ghost has been given up, to use a term that is used a lot here, and just kind of know when you need to be like, hey, like I want to take whatever profit I can get, especially as someone who likes scalping more, right? So it's definitely, I think we might have to say sayonara to Tesla soon and just try to protect whatever profit we can. So yeah, I do think position size is important. I think that's why I like, putting in like, doing multiples of 2 or 3, so I can take out half or third of my position depending on how things are shaken up. You know what I mean? So that's kind of what I'm trying to do here using the example of the Tesla trade. Let me look. Oh yeah, also update on the Macys. Let's look at Macys. Macys is going higher. We're going the elevator to the top floor for the Santa parade. Really weird analogy. But yeah, so I think, now I'm going to keep an eye because we kind of got around days highs. I think we actually got higher than days highs. So now this is a moment of like, I said I'd like to kind of get to this 1430 and then I changed my mind because we went higher. So it's definitely a matter of like, we're still within where I want to stay. Like I said, if we go below like this 1405, because that was where this kind of movement to the upside got a lot of traction, then that's probably where I'm out. Do you know what I mean? But it's also, I want to have a profit amount that makes sense. So I think it's really sometimes like, as much as risk has to be consistent, I don't really think things are like a hard and fast rule either, right? I think sometimes the trade changes, and I think you also need to be adaptable with the trade. I was just talking about that yesterday too, with regards to, I think part of risk management and part of staying consistent with risk is also realizing that you have to adapt your approach. So different stocks, there's going to be different risk principles. So with a stock like Tesla, like I was mentioning, because it moves a lot faster, I'm going to have my eye on that one a lot more with regards to where my stop is, where I want to get out. Because Macys moves a little bit more slowly, as long as I have the book and the chart and my side chart, which I do, then I can kind of just let it run, let it do its thing 21, and then just be aware of what is happening. So I honestly think like these rules are all really helpful to know, but I think part of risk management as well and part of trading, especially as someone who's still very new, right, is learning what strategy works for you. And so for me, that's why I like scalping, because it's a good way of kind of minimizing my risk by knowing, this is how long I want to be in this trade for. This is when I want to get out. An example here too, like with regards to scalping and ranges, let's look at Nvidia, because Nvidia has been a little bit rangy today, especially earlier. So like, if I'm seeing this kind of movement, right? Let's see, we got off this low. We have a double bottom. Maybe I'm like, I want to see if we can get everything out at 496. But then we don't get to 496. So if I'm noticing this, I have the plan to get, let's say I want to get profits at 496. And then depending on when you get in, let's say I want to give myself like $1.50. I want to get out at 492.5, right? Then if I'm planning to get out 496 and we don't get to that point, then that's when you look at a combination of the chart and also what's going on in the book and saying, oh, we're having some resistance at 495. Let's take out the whole position here. Do you know what I mean? I think being adaptable is good too, because sometimes the stock won't get as high as you want it to if that's where you're planning your risk reward, right? Which is why I don't necessarily stick to the risk reward strategy. I like using, and a lot of this is like, Sharif talking to me and talking me through that. I think higher highs and higher lows, like that kind of strategy, I find helpful, because then you actually, especially if you're trading within ranges, you have kind of purer levels, right? But sometimes the levels don't hold up, and in that case, that's when you need to be adaptable, you need to adapt, you need to be ready for risk. And I think, patience, right? Like looking at the stock ahead of time, looking at where levels are. So for example, if I were to have shorted Nvidia around this 495, maybe I would decide, I want to take all my profits out at 492.50. Why? Because this was definitely like a level for the stock earlier today. This is where we kind of went back to the upside. This is also where we were having resistance while I was in that very ill-fated short earlier. So I think part of it, and like, the more you trade a stock too, the more like if this certain stock is, holding levels up intraday or within, the week or the day. So I think that's with regards, this is kind of me talking through how I would adjust my risk in this hypothetical Nvidia trade. Although obviously the real Nvidia trade I was in earlier today went awry, to say the least. So yeah, that's my little risk management spiel. I think being adaptable is not a bad thing, but I think you're more able to be adaptable if you do have your risk management strategy in place ahead of time, and you know how much you're willing to risk, you know how the stock's moving. I think being prepared is never a bad thing.
Absolutely, couldn't agree more. Quick market check here. Obvious rejection off yesterday's close right now on the NQ. Why are we not surprised? This is why we chart, guys. Closing prints. I always big believer, that, of closing prints, because that is the committed money. That is the money that stays around after 4 o'clock. And by virtue of that, it is the stronger money. That's just my opinion. And that is where we touch that level exactly. rejected off it, and look where we are right at Vwap. Now, the question is, does the former area of resistance now act as support? We know for a fact. How many times did we get rejections off Vwap to the downside this morning? So it clearly acted as a level of resistance. Now we're looking for former area of resistance to act as support. If this comes down and starts breaking down, that's going to be the end of the futures trade right now. But looks like we have a little bit of weakness definitely coming into these markets. It probably pays now to do a little bit of housekeeping check on some on the economic calendar. Allow me a minute here. Way too many advertisements. I got to filter up all this crap now. I don't know why all these different countries are showing up custom. There we go. Deselect all of them.
Yeah, I know you were saying that all the countries show up when you look for economic events.
I have to do this every single damn time. There we go. All right, now we're good to go. All right, here we go. All right, we got the U.S. Baker Hughes oil rig count, which is important for our oil traders out there. We get that at 1 o'clock, so about half an hour. We get a lot more oil-related data points coming in at 1. And then there is some stuff with respect to gold coming in at 3:30. I'm trying to see if there's any Fed speakers here on a Friday.
I think they finished this morning.
They did, yeah. It looks like they're done. We had Collins, Goolsbee, and then Collins again. Yeah, that looks like it's it. We obviously had building permits, housing starts, which came in above expectations. I didn't expect that, to be honest with you, so good look there. All right, so that we're done that piece of housekeeping. Now let's go on to the final topic, which is hedging strategies. We already talked a little bit about this, but we're going to repeat it again. Hedging is an investment strategy used to offset potential losses that may be incurred by other investments. In simple terms, hedging involves taking an opposite or neutralizing position in a related security. So we're going to talk about direct hedging, and we had a little bit of a discussion back and forth in the chat earlier. This involves taking the opposite position in the same security. For example, you can go long Tesla in one and short Tesla in another. But what would be the point of that if you don't actually get out of one of them at a specific level? It ends up being a zero-sum game. Here's what I mean by that. So for example, this futures trade right here. So say I was to take the NQ long. Come to the chart, Ram, if you're able to. If I was to take a futures position long, let's say through 15.9, right? And then I would go short at another level. Now, maybe I would get in front of 15.9, waiting for that decided 15.9 break, and it would be short the other one. And if it, obviously broke and held above that, I would close one position and let the other position run. So you could do that. That's not something that we do on the prop floor here. We only have one account with which to trade. You can probably do that at home, but I'm assuming you're going to need multiple accounts in order to be able to do that. It's just not mathematically possible to go long and a short on the same equity unless you're doing it with options. I'm talking about futures contracts or equities in one account. The other one, indirect hedging, involves taking a position in a related security. For example, you could hedge a position in a company's stock by taking a position in their competitor stock. And we talked a little bit about the Walmart-Target dichotomy that we had earlier in the week. I mean, if you were long Target and then you shorted Walmart, you absolutely printed because Target absolutely went to the high side and Walmart did the opposite. I'm willing to bet, though, most people were the other way around. They probably took Walmart long and they had a short on Target, right? And if that was the case, you probably were met with a bit of an L because both Walmart retraced and Target skyrocketed. So it doesn't always work, but I'm assuming you probably would have been holding Walmart from earlier anyway when it made all-time highs at 170. So indirect hedging, another way to trade. And this is more for swing trading too, but you can do it intraday, but I've never tried it personally. And then lastly, options contracts. Options give you the right, but not the obligation, to buy and sell a security at a predetermined price within a certain time frame. This can be used to hedge against potential losses. We know about that. What do they call that? The iron condor? Yeah, the iron condor. Again, I don't know too much about options, but there's all these options hedging strategies that you can do. You can go long a security and then buy puts, close them out if a certain level is breached to the high side. It helps you hedge your bets. Again, I think it's more of a swing trading strategy than intraday, but I'm sure it can be applied intraday. But you have to be cognizant of these, and if you really want to be able to manage your risk, learn a little bit more about them.
Yeah. I think, too, with regards to hedging, I think it's something I'm still, like I said, still trying to learn a little bit about. But I think, too, if you're looking at, like, indirect hedging, I think sometimes, too, like you just use the example of Walmart and Target, which is a really good example. But I think intraday, too, it's hard when some stocks move in tandem with each other in the same sector. So, you know, a lot of the NQ names will move together. So it might be, you know, kind of risky to, not all of them, right? But if they're, like, kind of in the same realm, it might be a little bit difficult to be, you know, doing hedging with stocks that will move similarly. Or even Rivian and Tesla lately, a lot of times have been trading in sync, right? So I think it's, you know, sometimes it's a little bit more difficult than others. It's definitely something that you have to, like, look at ahead of time and really kind of gauge whether or not it makes sense. But I think, yeah, as a rule, it's an interesting idea for sure, as long as you know, with everything, as long as you plan it out and have patience. Speaking of patience, that is what kind of got me in the Tesla short. I did div out early, but I took profit on everything, so I'm not going to cry over spilt milk. But we could have gone a little bit lower. We got to like 233, 440, and I didn't get out. And I think because part of it was, I think it's like I was kind of torn because part of me was like I should have just waited till like my stop idea, which was this 236. But then the other part of me is like you want to take profits where you can, right? So I took profits where I could, even though I only had half my position left. But, you know, we could have gone lower, right? So I think it's just something to reflect on. And I think for myself, a big thing to reflect on, like I said, as someone who leaves good positions early and then stays in bad positions for too long, quite truthfully, which is something I'm working on, is basically just knowing kind of when to stay. And then also kind of, you have to decide for yourself, would you rather take a loss or take what little profit you could get? I decided to take profit. Maybe that was the wrong decision. But, you know, I think that's kind of what's nice about trading, too. No one size fits all, especially when you're looking at the you know, risk management as well. No one size is going to fit all, right? People use different strategies. I know Sharif uses a lot of higher highs and higher lows for points of entry and exit, and then that's kind of where you plan your stops around, right? I try to do the same thing, and I think, you know, I'm very new, so as I learn, I think I will get a better sense. But for myself, you know, I think right now, these are the strategies that work for me, right? So I think, you know, learning, adapting, and then whatever you can live with. In this case, you know, I lived with like a little bit less profits because we already did have some profits on half the shares, and something I can reflect on, but for now I'm, you know, happy with it. And I think that's part of risk management too, is reflecting, did it work for you? Did the strategy work? We had a lot of talk to in the chat today about, like, you know, how long have you been trading for? What kind of strategy do you like? And I think honestly, the more you trade, the more you get a sense of strategy. Yep. You're not going to win 100% of the time, but if you can minimize your losses, then that's something to be proud of, right? So, you know, I'll be proud of this trade. Also, we did have a super chat from a while ago. So thank you to Ariana Layden for the $1.99 super chat. If we see Dish at $10 next week, don't be shocked. Let's look at Dish. Dish.
Yeah, I don't know about that. I saw some people talking about that.
Well, yeah, it's not at like $5 yet, so I
Go
think.
to the daily on.
I was just gonna. I feel like the daily for these are
quite comical.
Okay.
No, zoom out even more, Adair. Like zoom out.
Like as far
Keep
out.
going. Yeah.
Has it ever been to? Oh, it was at 10.
Yeah.
Oh, okay. Okay, so
not a good look.
When's the last time we were at 10? Oh, this is the Satellite Company. Yeah, I don't think.
Yeah, it is. Cell phones. I didn't even know.
So the last time we were at $10 was March 2023. I hate to say this, Ariana Layden, and thank you very much for the super chat, but it looks like we will be in a bit of a pickle trying to get to 10 of this name. So we're up 6% in the day, and we're at like 350.
I want to know what the turnaround plan is. You don't have to super chat again.
The volume's also not very good on this name, I have to say.
What's the turnaround plan here? I mean, like, we know that the rural areas like to use satellites because they don't have cable infrastructure, which is fine, but I mean, what's the move here?
Yeah, also, I saw Raphael in the chat. I am trading on a simulator right now. Hopefully we'll be at live soon. It's been a big learning curve. I started trading when I started here. So I'm still very new. You know, everyone's been really helpful and patient. But yeah, so I think we're on the simulator right now. We're working up. But yeah, so also I should, you know, address with regards to risk management, this trade as well that I'm in, unfortunately. And I say unfortunately because I'm some mild regrets. So
annoying.
Yeah, with the dark pool wick here. So I got into.
Show you how to fix it? Have I showed you how to fix a dark pool?
I don't. I think there was a way, but okay.
Yeah.
But yeah, so basically, I got into this because I thought we were going to go dip below VWAP. We did have a whole bunch of candles to the downside. We were down on the day. It made sense. In the end, it kind of has moved in the opposite direction. If we break, I think, decisively above like 30, I think it's at 372.25. That was my level where I wanted to get out. So I'm going to wait and see here. It looks like we could be kind of retracing. But yeah, I think having risk in mind and knowing how long I want to stay in a trade for helps me out. Because if I didn't have a plan, literally the second we started going up, I would have pressed like the out button, you know, escape room, drop the trap door, let me get out of here, right? So I think, you know, you practice and you learn, and then you get better. Yeah.
Absolutely. Huri 2S, thank you for the 99-cent super chat. Sadly, you didn't put anything in.
Thank you for the chat, though.
Yeah, for the super chat. Thank you. I appreciate that, definitely. Tag me if you'd like me to answer anything specific for you. D-Loaf, FSR, Fisker, moving up, can bid 255, break 254 of that recent consolidation before the liquidity grab. Can be your out 1 to 2 penny risk. Okay, you know, this is not my kind of stock, but I will have a look at it. Let's go FSR. Here we go. What was the theory there? 250 break at 255, bid at 255, break of 254, 1 to 2 pennies. Yeah, I mean, look, it broke 250 right there. It held 250 quite nicely at 249 low a day. This isn't my cup of tea. It's got some liquidity. It's doing some shares there, about 500,000 shares per 5-minute candle. So the liquidity is there. It's sub VWAP. It's below the day's close. It's a counter trend trade for me. I'm going to have to pass on that one, but thank you for bringing that to my attention. I'd rather talk more about the fundamentals of this company that I was actually talking to Randy back there about Fisker, and we were talking about how, you know, it's a good-looking car that they have, but they're not able to sell a lot of them, even though they're able to make them. They made about 5,000, sold about 1,000 or so, we found out in their last earnings report. Yeah, you know, it's probably the high rate environment that's really holding them back here. That's kind of how I feel about that. Let's scroll down and see what everyone was talking about. Sharif, those kinds of option strategies allow you to be agnostic about the direction and bet on the level of volatility, to bet on the size, range of the move, or lack thereof. Understood. Thank you for clarifying that. Says Zenod 1066. Shout out to you. Dish buyout rumors, says Short Smeller. That's a fantastic name right there, bro. Hurricane Ditka says it was on Wall Street Bets a few months back, and then the Wall Street Bets story didn't work. They started selling on Amazon, so that was supposed to be the catalyst to have it break out through the 6-7 range. I'm assuming you're talking about Dish Network. Okay, interesting. I haven't been on Wall Street Bets in a while. I do follow them on Reddit. I haven't even opened my Reddit app in, I gotta say, months probably. But yeah, that's the situation there. Let's see what we got over here. Anything being talked about? Slap Chop guys going to lunch. All right, my man, enjoy. Eat some food. Somebody in the chat there was saying, well, I do cry over spilled milk. Have you seen the price of food?
Yeah, that's
right?
Fair. That's fair.
And
that's a
if
good
you're
point.
in Canada, you're feeling it, baby.
Ooh,
Because
yeah.
we still have food inflation up in this bad boy. Maybe not so much down south. I don't know what you guys are doing down there, but up here, food's still expensive. And I shop at No Frills, right?
Oh, yeah.
So, yeah, I love No Frills. I got to tell you the truth. So.
You got to get the price. You got to get the deals where you can. Stuff's so expensive. Like.
And it's owned by Loblaws, so they have a lot of PCE.
Okay.
President's Choice, yeah.
Nice, yeah.
So I'm good with
PCE is
that.
good. Like all the Loblaws own stuff is good. It's solid. Superstores, all those, yeah.
Well, Shoppers, Drug Mart, Loblaws, all the same company.
Yeah.
It's a big
Shoppers,
boy
you can
company.
get good deals too. Like
Oh,
I
yeah.
like to, you know, scan and then wait for the deal and then you strike. Yeah.
And I gotta tell you, like Shoppers Drug Mart is far superior to any of the pharmacy chains they have down there. CVS, Walgreens, Rite Aid, they all quite disappointing when you go into the store.
Yeah, I haven't been much to either of them, but
crappy.
yeah, they're not
I
good.
gotta tell you, well, at least the ones in SoCal anyway, where my sister lives. Adam, haven't seen you trade Meta for a while. Meta and I left off on good terms. She gave me $100 earlier in the year, and we haven't rekindled our romance since. We're gonna leave it at that. We walked away. We shook hands. We dated for a little bit.
That's
and that
so
was
sweet.
it.
It was an amicable
Amicable
breakup.
There we
go.
Yeah, no, haven't traded Meta in a while. You're right. We did have a couple of trades on it around that 300
Meta
level.
Connect.
Remember?
Yeah.
That 300 level that kept recycling over and over
That
and over.
dastardly Meta Connect day. That was ill-fated, to say the least. We were both caught up in that, but you were smart and you got out earlier than I did. And I think that was also an example of risk management. I really, maybe as someone who I think had been trading for 3 days at that point, maybe I shouldn't have been getting in a stock during a news event.
Yeah,
Just a thought,
that's
right?
the way it is, yeah.
But it taught me a lesson about selling the news. So I think, we learned a lot from it, but also I think risk management-wise, I can look back on that and be like, some mistakes were made. That's what we do.
Yeah, I agree.
We learn.
100%. All right. What else is being talked about here? All right. So with respect to this futures trade that I'm in, look, I'm not really going to make a pronouncement, but look at how Vwap now seems to be acting as a level of support. I mean, how long for? Do we get that breakdown? We got the rejection of yesterday's high. We're getting some support at Vwap. I'm not surprised by it. What I am unsure about is how long it continues to act as a level of support. Do we break down? We're still down in the market. We're down 0.14. It really feels like a bit of an inside day. Is it an inside day? Yes, it is. No, because we made higher highs than yesterday. So technically, in the pre-market there at around 8:15, we got into 15,919, whereas yesterday's best was 15,906. But we're definitely still within yesterday's lows. So we have a higher high and we have a higher low so far. So even if we close red on the day, it wouldn't be that bad of a look on the daily chart. But in any event, it looks like we're trying to hold up here. I'm hoping through for that 15.9 break. I'm not taking anything out here. I'm looking for that move back up. And then if we can get like a nice big move into the pre-market high there at 15,919, that would just be aces, trading gods. So if you're listening, yes, please.
You're making a plea, yeah.
Blackberry, it's the 50 SMA EMA for any, is the 50 SMA EMA for any importance in day trading? I'm going to have to say yes. Again, with any indicator, look to see if the instrument that you're trading or that you're doing the analysis on is showing respect to that indicator. Like, for example, Vwap, it could be important at times and not important at times. Perfect example of where it is important, I just finished going through it right here. I mean, how many times do we get a rejection? Ram, come to the chart. How many times do we get a rejection at Vwap? And now, look, all of a sudden, resistance acting as support. So what I would say is put the 200, put the 50. Those are the most often used, but don't use them willy-nilly. Look for that respect between the instrument in which you're doing the analysis and the indicator that you are doing the analysis with. Is there any respect by that instrument is there any respect being shown by that instrument to the indicator that you're doing the analysis on? So that's what I would say. Before you just use it willy-nilly, look for that confirmation. So that's what I would say about that. Adam, Sean, and I got in the 90s, still going. Shout out to you, my man. Whenever you print Adam, honestly, I'm happy. I got to tell you the truth. So anytime Adam's printing, I'm happy for him. Hey, I'm back, says Renata. Welcome back, Renata. ARDX says Reliable Rudy. Let's have a look at ARDX. Ooh, small cap gapper de jour, baby. This looks awfully nice. Okay, so ARDX pumping here. Is it on my scanner? What the hell up? Where is it up on the day? Sorry, one moment, please. Let me just figure out what I'm doing here.
Oh, this one pumped earlier, I think.
Well,
yeah.
It's only up 7.69%. That's probably why it's not showing up on my scanner, or it's kind of like lower. Good. I mean, it's at high a day. The volume is a little bit suspect on it. I mean, we've done 3.69 million shares, which isn't much for a $4 name. It looks good, reliable. I got to tell you, I probably would have liked it off a dip on Vwap, but look, it didn't really respect Vwap earlier. Again, Look at this zigzagging. This is a perfect example of the equity or the instrument that you're trading, not really respecting that level. At least it wasn't respecting it right here. Maybe over here it starts doing a little, putting some respect on its name. But right now, or earlier, pardon me, it wasn't. So I'm going to steer clear of that one. Let's keep going down, see what everybody else is talking about over here. Reliable is long sub 4. So excellent. I hope you print reliable, obviously. It goes without saying. The Hayes, hedge funds have one of the largest 10-year treasury short positions in history, says bar chart. Interesting because we saw, Bill Ackman take that 30-year, I think it was TLT. No, TLT is a 20-year, right? Yeah, TLT is a 20-year. He was taking a short on the 30-year, and it was an absolutely monster print for him. I think he made about $200 million, but he since closed that position, and probably not a second too soon as, I don't need to show you guys this, but look at the 10-year. The 10-year has been in an absolute state of tanking lately. Here it is. We're going to show you the daily on the 10-year real quick here. I chart the, look at this. This is a one hell of a move down. We were knocking on the door of 5%, and now we're breaking down into that critical level, this crest over here that we made in mid to late August. We're right at that level again. Do we break down below that level? I don't see support until about that 4% area, which was the crest from February, and then the July highs there that we got into 4%. So I think if we break down decidedly below that 4.5% print, I don't really see any area of support until about 4%, give or take, 0.2 or 0.3 percentage points. So good look there. Looking over here at anything being discussed with respect to questions. Anything, any questions you guys have now with respect to some of the topics that we talked about, whether it's the 1% rule, position sizing, or hedging strategies, put them in the chat. Make sure to tag Adara9 so that we see that red rectangle. Otherwise, we're going to have to read every single line, and that's tougher to do.
We love answering the questions. We're here. We're all here to learn. And actually, I saw a comment from Angel Fonseca. I appreciate the risk management info so much, but also feel a little bit defeated at how much I still have to learn. I mean, I totally. The reason I wanted to bring this up is because I really appreciate and respect you saying that, because it's really hard to admit, when you feel discouraged with something. And I mean, I had a really rough trading day yesterday. Like I said, we lost on every position. And I think that's why I appreciate being able to learn up here live in front of everybody, because we're here to learn. We're here to make mistakes. And I think part of this whole trading journey that we're doing, kind of live here as well with the teaching, I think is helpful, because I hope other people feel emboldened and know that you are allowed to learn. And regardless of how long you've been trading, there's always interesting stuff to learn and interesting experience to have and to go through. And you're gonna have to take losses before you win. Like we were saying earlier today, you're not gonna win 100% of the time. No. But as long as you take as long as you're trying to make to be very cheesy and tie it back, as long as you're trying to manage a risk, as long as you're making baby steps towards that point, and be patient in a trade, but also be patient with yourself. That's a huge thing. We're talking about emotion and risk management yesterday, and I think you really need to don't be too hard on yourself. Someone was saying yesterday in the chat, it's so much easier to, castigate yourself or get mad at yourself for your losses than it is to celebrate your wins. And I think, what? Every trade had some good points and some bad points. You can reflect on what you did wrong. And I think, especially with risk management, it's a really good point to reflect on, because that can often be sometimes what makes the difference between a winning trade and a losing trade. Making sure you're not too greedy, like we were talking yesterday about fear and greed, trying to clinch those profits, and just, taking steps every day. So I really appreciate your comments there in the chat, and we appreciate the honesty. And yeah, we're all learning together.
Absolutely, absolutely. Okay. I would like to know what Neil is doing with Palantir. A minute. Neil is not at his desk, sadly, Eric. But when he does come back, I will ask him about what he's doing with Palantir. Absolutely. What else we got over here? Sharif and Adara should show us pics of their dogs and cats, whatever companion animal. I will oblige with that. I have my Frenchies, baby, Betty and Veronica.
Oh my God, actually?
Yeah.
That's so cute.
I didn't name them, though. I bought them from a couple that worked way too much. and they had to get rid of him, and they named him already. And I was only going to buy one.
Really?
Yeah, and then the owner didn't want to sell them separately because he's like, they're too attached. Right, like they sleep together, they eat, they do everything together. He's like, we don't want to break them up.
That is
And I
so
was like,
cute.
okay, fine, no problem.
I have a photo of my family dog.
Go
It's
for
not
it.
my personal dog, so he's in. Oh, that's not. There you go.
You
He's
gotta
in
send it
Winnipeg,
to yourself.
but his name is Laser.
Email it to yourself.
Oh, yeah,
so that
that's
you can
fair.
load
Okay.
it up on and
Yeah.
show it on the
He's
chart.
also Googleable because he actually ran away from our cottage and came back to our house.
Uh-huh.
Yeah, like he was in the news.
There you go.
That was a whole thing. Yeah, I'll email this to myself.
Yeah, I'm going to email it to myself as well. There we go. Yeah, absolutely. We'll do that. While Adira is doing that, I'm going to talk to Blackberry. Sharif, Adira, does a rejection of Vwap equate to a short-term trend change? I always exit my trades on these points in anticipation of a change and lose money. Look, when we say Vwap, I'm talking about the general area. I don't want you to think that, you know, on a volatile instrument like the NQ or like the MNQ, that you're going to have absolute holds of those levels. You're going to have to give yourself a buffer zone. So why am I talking about that? Well, let's have a look. Because look what happened over here on the NQ. Initially, when we had Vwap as an area, Ram, come to the chart. When we had Vwap as an area of resistance, you did break it. Look at this over here. It breaks above it, but look at the closing print south of it. And here again, a break above, a break above, a break above. And all of these are closing prints south of that level, okay? Much in the same way over here, when we now were straddling Vwap as a level of support, so resistance turns into support, you get breaks of that level, but look where the closing prints are, all north of there. So you're gonna have to give yourself a buffer between the indicator, in this case it's Vwap, and your stop, because unlikely to have an absolute level hold. You're gonna have the general vicinity hold. There's just far too much volatility in the market for that to hold absolutely. So you need to be cognizant of that, and you need to work around that by giving yourself a little bit of room. Adira, you got that ready?
Yeah. So the email's not working, but I can just Google him because he is Googleable. So I will find. There he is. Took me 2 seconds. This is him when he was like a baby. But yeah, here is little Laser. There he is. He's much older than that now. This was 13 years ago.
What is he?
He's a Beagle Cross.
He's so cute. What's
But yeah,
his name?
is Laser.
Laser?
Yeah, and he was laser fast when he ran away from our cottage and went to our house. So yes, there he was. He was on the news because that was a whole story in the local media, but he's very sweet. We have some cats as well, but yeah, Laser is like my child. So every time I go back to Winnipeg, you know, lots of love. Anyways, there we go. These are so cute.
That's this is Betty and Veronica. So this is Betty over here. She's bigger. She's like a more beefy version. And this is Veronica over here. She's more lean, she's faster, she's more witty. This one is much more reserved. She knows, she's got a bit of a chip on her shoulder, you know?
Yeah.
She's not gonna just come up to you like that.
They're so cute together.
Yeah,
They're so close.
this one will absolutely come up to you and will jump on you. She also has a thyroid issue, so I gotta give her the thyroid medication for that.
Aww. I love the little teeth too. Oh my God.
Ram's like, forget about the Starbucks. Just bring them here. We don't want to deal with you. We don't care about your coffee or you. Bring your dogs. Yeah. So these are my girls, and I have a dog walker for them. A nice lady in the building, by the way, that does it for free. She's just so kind because I've got seniors mostly in my building, so they get walked twice during the day, and then I get to take them out when I come out at night. So shout out to my girls, Betty and Veronica. All right, Dubs. Free Fall Friday to the end. I don't know, buddy. I think if we break through that 59, we might rock it here, but what do I know? Hog Rider. I like that name, man. Is that an ascending wedge on Meta? I will absolutely oblige, and I have to agree with you. Excellent analysis there, Hog Rider. Look at that. Low, higher low, flat top. Excellent analysis, Hog Rider. You get a couple of bangs there. That is an ascending wedge, in my humble opinion, and I think we do get a decided breach and a new high day above that, but what do I know? Let's just wait. Let it manifest. If it's going to break, it's going to break whether I talk about it or not, but very good eye there. Very good eye, Hog Rider. Very impressed with that. What else we got? over here. Can't see all. Sharif's. Come on, Hayes. Chill with that. What else we got? Oh, D's. Oh my God. Love your dog, Sharif. Cutest names. How adorbs.
They're so cute.
See, bring in those babies. Absolutely. I don't mind bringing them in here. I just might get fired, though, so who knows. Oh, my gosh, that's adorable with the sweaters. I didn't buy them those sweaters, by the way. My parents got them for them. What else we got?
So cute.
Blackberry, real fighting dogs. They will protect you on safari. All right, dude. They're more like just hang around dogs. They don't really protect at all, but they are good noisemakers. So if there's any, threat, they do pick it up on it. Obviously, Sharif, building old people too cold. What can I say, man? It's just a bunch of dinosaurs in my building. That's just the way it is. Elon. Adara, Sharif, any significance of options expiration on today's and yesterday's markets? I don't see any so far. Let me have a look at the options chain.
We were talking a little bit about the witching yesterday, which is a new term that I learned. But yeah, no, I think it's interesting. I don't really know if it's been impacting the markets.
Oh, have a look. Let's see.
Let's find out.
I have an options chain over here, so let's bring it in and then have a look at TSLA. Let's just pull up Tesla. Do we have any calls that are expiring today? November 17th. Yeah, we do. So there are calls today. I just don't know. Look, man, I got to tell you the truth. I've said this before and I'll say it again. I'm not an options trader, nor am I good at understanding this, but I just want to know if there was an options expiring today, and we definitely do. There is this one, November 17th. I just don't know how to interpret it, so I'll leave that to the people who do know how. So I can't really answer that. Yeah, so just basically holding on to this long here, waiting for a 15-9 break. We're going to circle back to some of the topics in about 5 minutes when we hit 1 o'clock. Between now and then, if you have any questions for us, put them in now, guys.
Yes. Yeah, someone was asking me, I think it was Raphael in the chat, like, what have you kind of been doing to learn, which I think is, relevant with regards to teaching and everything. What have you been doing to learn? If you've been reading any books or anything. I have been reading some books on, like there was a technical analysis book that Sharif recommended that I've been kind of working through. Also, I find, even like, as I said in the chat too, even just being here, being able to interact with the market is, I think, learning. I am obviously, like, I'm very lucky to be able to be trading, on the simulator and being able to learn in that way. But I think just kind of like being around and absorbing all the knowledge, like soaping it up like a sponge, I think is really helpful as well. And I think especially with something like risk management, sometimes, as unfortunate as it is, you kind of learn through your losses, right? Like I think maybe that's why we actually are harder on ourselves when we lose with regards to emotional management, because the losses hurt more. It is the type of thing where, you beat yourself up. But I think as long as you kind of, every trade, there's something you can take away from it, and you can learn and you can use that as an opportunity for better risk management. So for example, I'm pretty proud of myself in this Microsoft trade right now, even though it is a losing trade at the moment, because I was more patient than I've been in the past. Because my risk management strategy was, I said, and I think I said this out loud here too, if we get to like 327.25, kind of around where this like little candle was, I'm probably out. We didn't get to that point, so I stayed in as much as I was getting, increasingly discouraged when we were flooping around 372. But then we didn't hit 372, so I was just super happy. I decided to stay in. We do look like, we don't have a solid direction yet, but the point I'm trying to make is I think committing to your direction, because if it goes out well, then it'll kind of go hopefully in my favor. There's a question from Jameson Barna that isn't necessarily about risk management, but I think I can, connect it back here. How do you trade slow-moving ETFs, or do you just stay away from them? I don't trade them because, like I said earlier too, I think part of it is with risk management is knowing what stocks you're comfortable with, right? And I think obviously that comes the more you trade. But I like my mega caps. I like my Eli Lillys and Netflixes, like the larger, more expensive stocks. And I think part of risk management is knowing how to trade those kind of stocks, knowing how they move. So I would say I don't really have an answer for that.
And don't forget, remember we talked about liquidity as being very important. If the stock is too illiquid for you to be able to get out safely, especially at a particular level, you have to have somebody on the opposite side of that trade. And I'm not saying you're trading such huge shares that it's going to be impossible for you to get out, but you need to absolutely assess liquidity as part of your risk management strategy. Okay,
that's a really good point.
If it's an illiquid stock, or if it's even a small cap gapper that keeps halting to no end, you're not going to be able to get out during the halt, and that's the thing. So you need to be able to assess the liquidity, and liquidity just doesn't mean shares done on the day. It means about staying open in the case of small cap gappers. So that has to be part of your assessment. And I was talking to actually a buddy of mine at the gym yesterday. This guy, he runs a company where they do fundamental investing in small cap stocks on the Toronto Stock Exchange. And he's like, the liquidity has been absolute garbage in those names. Already, the liquidity on the Toronto Stock Exchange is much lower than you're going to find in New York. That goes without saying. But add to that it's a small cap. Add to that it's not small cap time because of elevated rates. And all of a sudden, you've got a problem with liquidity here. And so you need to be able to analyze and assess all that before you make the trade. So think about that before you get in. All right, guys, we are pumping here on the future. We're coming right back into that 15.90. You got Tesla pumping. You've got Amazon pumping. You've got Meta looking to go green with that ascending wedge. Shout out to Hog Rider for picking up on that. Good move up in the market here. We'll see if we get the continuity. This is the second time we're coming back in to yesterday's close at 15.897, 15.9 area. Do we break it this time? Vwap absolutely held as a level of support after acting as a level of resistance all morning. This is what I mean when I talked about, is the instrument respecting the indicator, or is the indicator just sitting there on the chart looking pretty? Give me a color.
Sitting there blinking and
yeah, right?
you know, just preening there.
The Katina man has just sent me something now with respect. Okay. So somebody asked about how the auction is determined in the chat. I forget who it was. I will. DK, go ahead. Yeah. Take your time, Katina man. Oh, you got it? Okay, I'm gonna have to probably read that. Okay, so DK, I'm gonna have a read through this, and then maybe we'll get to it towards the end of the show. But I think it's probably about time now that it's 1 o'clock to restart some of the lessons that we did.
Yeah, let's do it.
Okay, so let's go back, Ram, if we can, to that 1% rule. I'm sorry if we have to repeat ourselves, but we always have people coming in and out of the stream that we have to cater to as well. Okay,
yeah.
So you have the document. You want to take it through
Yeah,
this
let's
time?
do it.
Go
So
for it.
let's talk about the 1% rule first and foremost. That's basically successful traders, the goal is that you shouldn't have to risk more than 1 to 2% of your account in any trade. So if you have, like, let's say $10,000 in your account and you're risking 1 to 2%, this means you're basically looking to risk about $100 to $200 per trade, right? And so by making smaller risks, you're not going to blow up your account necessarily with 1 or 2 losing trades, because we are going to lose trades. We keep saying over and over, you're not going to be profitable 100% of the time. Sometimes you have days like me yesterday where we won 0% of the trades, which is like, obviously still not great, but if you have smaller risks, then you can kind of mitigate those moments, because also losing is, I think, part of learning as well. And taking additional risk can also be dangerous. So if you're doing more than 1 to 2%, you're kind of risking being detrimental to your long-term profits, because even with those wins, you still have those 10% losses, let's say, weighing on your conscience and weighing on your portfolio and your profit. Right. So basically being part of being like a market strategist, we keep talking about how a lot of risk management is planning in advance. So part of that is planning not to let your whole account explode TNT dynamite by putting in a much larger percentage. And so yeah, it's not possible to win every trade, but if the trades you're losing are teeny tiny little baby losses, then the wins you have will weigh on you less. So that's kind of the vibe of the 1% rule. And I think, that actually really ties in with position sizing, because I think 1% rule is more of like a part of the position size on, kind of in the larger term, like what you're doing for money value. But in terms of like share size, that's also important. I want to go back to my, magnum opus is a strong word, but my big trade today that I was really proud of that involved position sizing as a strategy, and that is my Tesla trade. We didn't have much going into this in the meantime. We were slightly positive on the day, so I was a little bit hesitant. I was a little bit weary shorting this name. But, I was looking at the patterns, and I basically said, I'm going to have a smaller share size in the first place coming into it. And then if we hit this area, which is where we kind of started to pick up on the long earlier, I'm going to say, we're out half the position. And I want to keep the rest, keep some money for the road, save a piece for the dream, if you will. So I ended up saving, and I was kind of waiting to see. Initially, the plan was I was going to get out if we got to 236. But then the more we kind of had top and turn around there, I decided I want to maximize my profits. I got everything else at 235. This is an example of how I knew going into this trade I was going to get half out early. I'm at least half out early. So I think part of, sometimes with regards to managing your position and figuring out how you want to get into the first place, I think a large part of that sometimes is position sizing, because you are risking, a larger percentage of your account. You're risking more capital and you're risking more shares if you go larger sizes. So especially with a stock like Tesla, which is a bit of a riskier stock to trade first and foremost, and also with it being a skosh of a counter trend trade, and by that I just mean because it was up on the day, then you do have to kind of weigh other factors in. You got to put everything on the scale, see what comes out. And in this case, what I decided to do was, play around with position sizing in a way that was pre-planned, just to kind of minimize my risk.
Absolutely. Okay, and while Adair was talking, we broke through 15.9 on the future. The high a day now on the futures. Why is it not showing me? Oh, well, not the high a day because there was an overnight high. But this candle wick took us to 15.903. We quickly retraced off that 15.9 touch, as likely. Longs were taking profits, as well as new shorts being instituted at the 100-point level. We're probably going to have a little bit of a duel between buyers and sellers at 59, as we typically do at 100-point levels. We saw yesterday how we were absolutely straddling that 100-point level between 15.8 and 15.9. We're getting a bit of a rejection right now. Let's pack our patience, looking for continuation above 59 next time to take profits. But if we tank, we tank. That's just the way this goes. But the market just tried to go green right now, breaking that 15.9 by about 3 points. But we're retracing now. Some good names probably propping this up. Somebody was asking me if Nvidia is really going to rocket through 495, and I said, look, if we get above 59 and hold above 59 and stay above 59, we want to get some closing prints above 59, not just a quick wick and then a retracement. Likely Nvidia probably rise through that 1495. It's straddling yesterday's closing price just south of 495, guys, on NVDA. It was been very strong, obviously. The last few days, we traded it very successfully yesterday for a $4 banger, and then it kind of gave down. It broke down after that, or if you recall, right? Because that's just the way Nvidia is. We talked about the volatility on Nvidia. So which one, you finished the 1% rule?
Yeah, I kind of got to 1% rule, and then I briefly touched as well on position sizing and how I think, it kind of goes hand in hand with the 1% rule, right?
Okay.
It's what size of, yeah.
Okay, you want to go through the next one?
Yeah, sure. I can go through position sizing as well. Yeah. So like I kind of mentioned, I did talk about this briefly with my Tesla trade, but sometimes if a trade is a bit riskier, I can pull up the Tesla trade again. But if a trade is a bit riskier, you might want to like kind of parcel out your position as you go to clinch profits, or even like what Sharif was doing yesterday with Nvidia with the beak wetters throughout, right, to really clinch those profits. And part of that, like I said, I think risk management and profit maximization go hand in hand. So sometimes doing things like wetting the beak, or taking saving a piece for the dream, or taking some stuff for the road, I think it's all part and parcel of risk management, because you're actually I think, part of it is maximizing profit. That's the whole point of why we're managing our risk, right? So that we lose less money. But like I said earlier, I think if you look at it as to quote 21 Savage, taking less L's and making more M's, I think if you look at it that way, then I think it's less of a stressful way to look at risk management. And I think in this case, that's how I looked at this Tesla trade. I took out half the position, not because I was super worried, because I wasn't. But I wanted to maximize whatever profit I could here, and I used levels to make that happen. Then the second piece I kind of took out, that was a little bit more of a knee-jerk reaction, I will admit. I could have been using emotional control a little bit better there. But, I was we were chopping and turning around a little bit here, so I decided, I want to maximize my profits and get out here. But I think the point of that is to say, you're really always adapting, and you're looking at it, and I think sometimes you can come in with a plan for position sizing. Some people also, this might be a little bit riskier. We were talking about dollar cost averaging yesterday and getting into sizes later. I think if you're going to have a plan for that, that is one thing. But you can't do anything all willy-nilly, right? Especially in this wild game of trading where the markets do not care about your feelings. As we keep saying, I think if you have a plan and you try to let the plan itself, the charts, the tape, whatever mechanism you use, then I think that's really helpful. Do you know what I mean? So I think that's my take here with regards to position size. And speaking of which, I may have to get out of my position on Microsoft, because Microsoft is getting a little bit close to the scary area that I do not want it to be in. like I said, well, okay, it's so hard to tell with this dark pool wicks, but basically I didn't want us to get to like 370, 225. That's when I was going to be out. We are approaching that at a very rapid speed, a very quick velocity at post haste, and so I think I will have to exit this position. So I'm going to do that quickly.
You did fixed position size or no?
Yeah, I didn't do fixed position size. I don't think. I think I must have talked about it.
So let's talk a little bit about the different types of position sizing. Ram, if we go to the next topic, if you're able to, thank you. Fixed position size. This method involves trading a set number of units every time. While it's straightforward and easy to do, obviously it may not be optimal for risk management. I kept giving the example of punching in 100 or 500 shares on Nvidia is definitely not the same type of thing, not the same type of trade as punching in 500 shares of Intel. They do not trade the same. They do not have the same characteristics with respect to intraday movement or even on the daily chart. You saw how long it took Intel to kind of make its way back up in that upward channel, whereas Nvidia can absolutely skyrocket in a matter of days. Intraday, obviously, as well. You need to, you need to look at using fixed position size with through the lens of skepticism. Okay, unless you're very, very experienced and you're able to manage risk very well, I would not suggest using fixed position sizing, especially for newer traders. Percentage risk, which is kind of a derivative of the 1% rule. I would say the 1% rule is a maximum, 1 to 2%, whatever. Is the maximum you should be using in any one position, whereas the percentage risk method for position sizing a little bit different. This method involves risking a predetermined percentage of your trading capital on each trade. This ensures that you never risk more than you're comfortable with losing on a single trade. So that obviously stands for itself. The percentage volatility is the one that I subscribe to the most, and this basically goes as follows. This method adjusts the trade size based on the security's volatility. A more volatile security would lead to a smaller position, while a less volatile security would lead to a larger position. You needn't be a super chart Michael Noss style chart analyst to know whether a stock is volatile or not. Look at the daily chart, look at the intraday chart. Is it moving 10 ways to Sunday on the intraday, or is it, a gradual mover that kind of makes its way up, right? You're just basically a cursory view of the chart will be able to tell you that. If not, look at the average true range. The average true range, if you're able to look at that on your platform, will also be indicative of that as well. And then base your position upon that. So going back to the Nvidia, Nvidia, Intel dichotomy there, the example that I was giving earlier. Look at the futures absolutely pumping to the high side.
So happy I'm out of my short now.
59.06. I just took a beak wetter through 59.05. This is really going, guys. Now, if we get a move here above 59 and close above 59, this could be good. We have a series of higher highs and higher lows on the chart. Now, we're just going to need, a closing move here, not just a wick. We're not looking for wicks. We need sustained movement. Good move on the future. We are now positive on the NQ, 0.04%, 5%, whatever it is. But, it's not much. Let's see what we get. We're long there at 43, so nice move there. But going back to what I was saying, between Intel and Nvidia, this is the theory that I subscribe to the most. I don't punch in willy-nilly. Just a random share size. It's based on the volatility of the stock. The small cap gappers that can't seem to stay open, you have to get in with smaller size because you may find yourself locked out of that stock 15, 20 minutes. It could be longer. If it's a news pending halt, you could be in there for a day. We've seen it before. You could be in there for days. Days. What was the last one? Bed Bath & Beyond? Was that the one that halted for multiple days? Who was that? That we had like a multiple, yeah. I forget what it was, but yeah, in any event, you could find yourself locked out of that stock for days. If it's a volatile stock and it's shown its propensity to halt and stay halted, you need to really be careful with how you get in with your size on that.
Oh, yeah.
Yeah, so that's my look there, Dara, and that is basically a little bit of position sizing. You want to talk a little bit about hedging strategies?
Yeah, let's talk about hedging strategies. But I have a quick anecdote too about with regards, I always say this, but with regards to why it's so important to really think about position sizing when you're in a small cap, one of my first trades ever was Axla, which was a teeny tiny baby small cap. And I got, what is it? Sorry, my microphone back. We got we got halted while I was in it, and then it went like more than $1 to the downside. So I ended up having to pace it out. So I got part of my shares out a little bit more, and then as we kind of got lower. So yeah, that was regard to position sizing. But I think what I really learned from that is, you know, if with stocks like that, you have to be super careful with regards to risk, and don't just hop in because you see stuff moving. Really take your time and or pay the price.
Pay the piper.
Pay the piper, which I definitely had to do on that, let me tell you. Hedging is basically an investment strategy that's used to offset potential losses that might be incurred by other investments. So basically it involves taking the opposite or neutralizing position in a related security. So there's direct hedging, which is basically when you take the opposite position in the same security. So if you own shares of a company, you can short sell the same amount of shares. If the stock price falls, then whatever you get from the short is going to offset any losses you have from the shares you actually own yourself. There's also indirect hedging, which is like taking a position in related security. So if you hedge a position in one company's stock by taking a position in a competitor's stock. So Sharif just had the really good example, I know, for a different case of Nvidia and Intel. Yep. That could actually be what you do there. If you know, oh, like Nvidia's like, well, let's say you're in Intel, you're like, oh, that's not going well. But I know Nvidia, if it's a move, it's going to move a lot. So then you decide to hedge by going in the opposite direction in Nvidia, par example. Or I keep using the Tesla and Rivian example because I think that's actually a solid one that we see a lot lately. Rivian and Tesla will move in tandem, so that's why you kind of have to keep an eye because sometimes stuff in the same industry won't move in opposite directions. So you kind of have to watch to make sure that it is working out, making sense. Options contract is another way of kind of hedging here, right? They give you the right, but not the obligation to buy or sell a security at a predetermined price in a certain time frame, so they can be basically used to hedge against any potential losses. That's my spiel on hedging there. Yeah.
What a move up on these futures. Now we are coming near the overnight high. We are about 5 points off that overnight high, 15,919. We just got a break through 15,915. Let me just double check. We got a 15,915 3/4. Again, I'm going to go ahead and say that 15,919, the overnight high, likely will be a level of resistance. We may encounter resistance at this point here in the same way that we encountered resistance first at Vwap. Second, at yesterday's close, we had multiple reject. Oh, let me just bring in the chart. Why am I even talking about it without showing? But here it is on the NQ. I love when technicals actually, you know, they manifest.
When they're technical,
reject. Yeah. This is the white line here, guys. That's Vwap. Let me make it thick so you guys can see it a little bit better. Let's go. How do I do that? Yeah, there we go. Okay, change indicator thickness. We're going to go with a 4 so you guys can see it. So this white line here, Vwap. Reject, reject, reject. How many times we reject over here? Then finally, at around 12 o'clock, lunchtime comes, we break through it. Then look at this line. This line is not a random line that I put. That is yesterday's close, 15,897. We reject off yesterday's close. Where do we come back into? Vwap, right? Hold Vwap, and then we break through yesterday's close, and then we do the dance with 15.9. So all of a sudden, you know, we've got a 3-point buffer there between yesterday's close and 15.9. 15.9 then acts as the resistance level, and I'm going to go ahead and say that this peak over here, which we touched multiple times overnight at 4 a.m., and then again between 8 a.m. and around 8:30, 15,919 was an obvious resistance level. I'm going to say we're likely going to have a bit more resistance around there should we make it up there again. But good move up today. Now let's look at how the daily is looking on the NQ. Yep, we have made a newer high from yesterday. We have a higher low from yesterday, so the trend intact. We still haven't broken through that CPI algo print that we got on the 14th. That took us to over 16,000 a day. We got to 16,049.5. But look where the closing print on that day is. The body of that candle is so tiny because that was an algo print that absolutely retraced. So I'm obviously going to have, I would say, it's obvious that we're going to have resistance at that 16,000 level. Should we make it up there? Probably not today. Probably, you know, if we're lucky, into next week sometime. But yeah, good move today up on the future, baby. The future holding up. Let's just see if we hold up now. Let's look at how 15.9 acts as a level of support, because it sure damn was a resistance level on the way up. Now, does it act the same way as Vwap, where it was initially resistance and then it acts as support? We'll have to wait and see. Mr. Zion Lala, great midday show, guys. Thank you, Zion.
Thank
Appreciate
you.
the kind words. Great knowledge you both are spreading for all the traders, and helps us be more disciplined. Y'all are like family now. We appreciate you, Zion. You're the one that's like family, showing up every day, putting in the work, and you know, being active in the trade. And I see you helping other people as well.
Yeah.
Always asking good questions. He talks to the Neil. He talks to the Katina man. He's involved. And many other people as well.
Yeah.
Right? Great community that we have.
Yeah, we're all in this together, to quote High School Musical, unfortunately. And yeah, we love the support, and we're all here. Like I said, I feel like I learn a lot just being able to be here and seeing everybody's opinions in the chat, being there with everyone. Yeah, I think it's been a beauteous experience. I also think too, to go back to the NQ,
yes, ma'am.
I think it's a little bit of a prelude or a precursor, if you will, for next week with regards to chart patterns. Because I know we were talking about this off camera.
Yeah.
You were saying with the, you know, consistently, like we had like even on the money, that beautiful, like the testing of the Vwap, right? And then we broke above Vwap. It was a really nice chart pattern. So yeah, I think just to remember, new learning experience is always coming up, and we do have the chart patterns next week.
Darwin's always making me laugh in the chat, man. He remembered that 2 pumps thing. I'm not going to get where that came from, but you can tell he's an OG in the chat, Darwin. And he says, was it 3 pumps or 2 pumps? Pretty sure it was 2. Was it 3? It was like a year ago now, so I kind of don't remember. But yeah, okay, whatever. And then shout out to the Playmaker. May he rest in peace. Obviously sent me the cream that I still have. Anyway. Darwin says there in the chat, makes me laugh. He's like, I'm just here for the lunchtime menu and the entertainment. Shout out to you, Darwin. Way to prioritize, buddy. Did you do the lunch thing today, Katina man?
No, we didn't.
I don't get the email. I'm not the big kahunas, right? So.
Thai pineapple chickens.
Thai pineapple chicken with stir fry for all the people out there that want to know what the Katina man was munching on. He doesn't even eat that. He gets a salad. So he gets to see what everybody else eats. And then, you know, if there's any leftovers, we're allowed to go and we're allowed to pick it up and yam it down. So that's the way it is there.
That's the strangest food analogy I've ever heard. I like it, yeah.
DS29, the Dixie breaking support. Good. Let's have a look at what the U.S. dollar is doing. Yeah, it's down against the loonie here, about 0.16. Shout out to Diamond Realty of Miami, Mr. Dupont. He knows exactly what. He was around that time. Shout out to him. Nice, sounds delightful, says Deez. Made my day. The chicken made my day. Absolutely, absolutely. Okay. Maroon 05, thoughts on Tesla? Well, look, it's at higher days, man. 237.07. It's up 1.4%. You know, it was a bit of a V-shaped recovery there on TSLA.
Indeed.
What the hell? Why isn't this moving over? Yeah, there we go. On TSLA. I know the Katina man was like $2 or some $3 in the money on this bad boy earlier, but now it is holding up, and it looks like it's...
It was a short earlier, but it's not anymore.
It was absolutely a short earlier. And, you know, it's holding up now. We have a local high there of around, I want to say about a little bit above 245, that 246 and change. That takes us back there to November 15th, about a couple of days ago.
Oh.
But yesterday was a down day for Tesla, no question about that.
Yeah.
With lower lows and lower highs. Looked like a V-shaped recovery today. And do we get into yesterday's highs? Yesterday's highs, I'm going to go ahead and say 240 would likely be a good resistance level off which to work. I'm not saying we reach there, but those, look at all these wicks yesterday right into that 240, all of which were sold off. And it also happens to be the whole dollar level, the $10 level. You know I like to chart those. So good luck for TSLA today, but we'll see whatever it does. The dead one is back. The dead one is back. Apple, very weak today. It gapped up earlier. It looked like it was the strongest of the bunch. It got it through 190, 190.38. It's really trying right now. It held up above 188 quite well. It's holding above 189. It's coming into VWAP. This was clearly a resistance level earlier. This white line here is yesterday's close, so we're still negative on the day until we take that level at 189.70-ish area. But yeah, AAPL really not the poster boy for a long today.
No.
The poster boy has been AMZN. Yes, the Amazonian is back there. He's leaning on his chair. What's your look today on Amazon, Kenobi?
It's trading. I love how confidently he said that too. Like
He's
it's
a
trading.
fantastic individual. He says it's trading.
I know he likes to say what direction it's gonna move in. I know that's the whole
Kenobi?
thing.
What'd you say? Oh, you didn't say it? Okay. He didn't say anything. So he has nothing more to add. He says it's trading and, go ahead.
I enjoyed that. I like the OB interludes. It's very fun.
Right? So that's the look there. I would say Tesla and Amazon looked like the strongest of the bunch for now. The Katina man is still long Amazon 143.50, almost $1.50 in the money there as Amazon knocks on the door of the day's high at that 144.90 a dare.
Yeah, I'm just looking at the dead one.
Hey?
Honestly, I have Apple up.
Okay.
It is always the dead one. It is still the dead one. Literally just dancing around Vwap. Like, you know what? Like I said, like we were talking about how not all indicators are always useful for all stocks, but Apple is clinging to Vwap like I don't know, like a suction cup or something. It's like gripping to Vwap. It will not leave Vwap alone. So, like we were talking about that with regards to risk and planning trades. I think not all indicators are always valid, but Apple and Vwap are besties for better or worse, and honestly, mostly for worse, because we're having a really hard time breaking up to the upside. Very much, it is. It's in zombie mode. It is the dead one forever. Also, let me look at. I'm in a gap short, which I didn't really talk about, so I guess I should and can. It's going well so far, honestly. We're trucking along here. We're riding the bicycle. Weird analogy, but here we are. Basically, I want to get out I want to get everything out probably around this, around the 1760. And why? Because that is where we saw a little bit, like that was where we had a lot of resistance here, right? We were stuck to this point. We weren't going any lower. I guess support then, because it's a short, so it's opposite. We had support here. That's where I want to say goodbye. I would like to be out. Also, in terms of my risk, because we were talking about risk here too, always, 1795 was about where I wanted to be like, goodbye au revoir, because that was where we were kind of seeing again earlier. Like I like to look for support and resistance, and like we were saying, if you're going to look at your entrance point with regards to risk using a certain factor, then you should also use that factor for your outs. In my case, today, sometimes I use Vwap. Today for this stock, I'm looking at the highs and the lows, and like the Chance the Rapper song, and and generally it looks like we're on the right path so far. I'm going to stick in this vehicle for now and let the gap take me to the mall. I'm very happy with this. So yeah, so just kind of talking about that. Also, yeah, I can reflect on the Macys trade. Did not super go well, but I mean, we lost like 10 cents. It wasn't massive. So basically, I should have gotten out around here. I should have been scalpier. We've talked a lot about how like sometimes like trading closer to your personality is more successful. I should have been scalping here. I like scalping more. I don't know why I didn't. But I ended up staying too long. We did have a bit of a loss here. I got out here because I was going to get out kind of around this 1405, because that's around kind of where Vwap was and where we were seeing some support. But then Vwap kind of moved positions. We broke down so quickly that I was just like, I need to say au revoir. Also, Neil in the chat, let's go to the mall. Robin Sparkles, woo! Yeah, have anyone seen How I Met Your Mother? I've not seen all of that show, but I've seen enough to know that's a great reference. And it's Canadian, so I love that. The mall.
I watched that for the first time yesterday with that Barney character, Neil Patrick Harris. Is that How I Met Your Mother? Is that it? Yeah. So
it's not like a great show, but there's like certain moments that are like really funny.
It was. It's on Comedy Network.
Oh, really?
Yeah,
okay.
yeah. So I was watching that because I usually watch The Big Bang Theory, and it was on, so I let it play, and it was kind of funny. NPH is an intense character, man.
Yeah, it's a lot.
NPH is like, even the way he acts, like he's intense. And I remember him from Harold and Kumar, Go to White Castle, and he was hilarious in that. So I kind of always thought he was funny. All right, guys. Yeah, there we go.
There we go.
Ram. I go, that's not even Ram. That's the Chilean Nightmare back there now on the 1s and 2s. Shout out to him. All right, guys. Holding up above 15.9 right now on the future. Let's get the questions back into some of the topics that we were discussing today with respect to position sizing and hedging strategy, guys. Let's circle back around to that. We have about half an hour left on the show. I'm sure there are questions that we missed them because there's so many people.
I just saw one from Angel, actually.
Go for it.
I find I DCA down because I second guessed that my entry was too early, but the thesis is correct. Where do I start to correct that? Just stop DCA and get out when the play turns, or change my entry strategy? I think I really appreciate this question. I think honestly, sometimes it kind of depends on, again, like a lot of things depend on the stock, right? I want to look at this question again, but yeah, sorry.
Yeah, so with respect to dollar cost averaging, it's a bit of a risky trade. So first and foremost, dollar cost averaging has to be planned. You do not dollar cost average if it was not planned. If it's not planned, that's where you're going to get in trouble. Now, it also has to be placed at key levels. It just can't be a random willy-nilly level. You have to like the level. So when I look at a stock, there's not just one level that I like. There are multiple levels. So I talked about this a little bit yesterday and the day before. If there are multiple levels that could be relevant on a particular instrument, it may be wise to get in, like, say, a 25% position at the closest level that's going to trigger, and then having another 25%, whatever, 50%, whatever it is that you're planning your risk around at that next level, all the while knowing that if all your dollar cost averaging levels would trigger and you would get stopped out, that you do not exceed your max loss. So when you're doing the dollar cost averaging analysis, you have to basically plan out for the worst case scenario. And if all of them trigger and you end up getting out below where your stop loss is going to be placed, it has to be within your risk management framework. So number one, they all got to be planned. Number two, if all of them were to trigger, you have to be within your risk parameters. That's what I would say to you. Don't just dollar cost average willy-nilly. That's how you get in a little bit of trouble.
Yeah, I think like everything, it keeps going back to this, but for all of trading, especially risk management, plan, and then be prepared to adjust your plan if you need to, but adjust your plan to protect your profits, not to like take on more risk, if that makes sense. So, you know, when I was in that Tesla trade earlier, like I said, I initially was planning on holding on until we got to 236 because it was a short. Then I decided we saw some resistance and I decided to get out at 235. So obviously I still could have stayed in longer, but you know, this ended up being okay for me because I didn't, it's not like I got out and then like lost, you know, potential profits. We obviously got less profit, but we still got some profit, right? It wasn't like a situation, you know, and then also I wasn't doubling down. It still was to protect the profit, right? Like, so I think with dollar cost averaging, it definitely is tempting. And like, you know, we're talking about mean reversion and how we've been talking about this a little bit last week, and I think we keep mentioning it this week as well, where it's like very tempting because you want to get things for what you think are the quote unquote best price, but sometimes you're just buying into a losing trade, basically, right? So it's really, I think if you plan on it, that's one thing, but if you're just kind of get in too early and then you're like, oh no, oh my gosh, like I did that all the time where I was getting into trades too early, and that's again why I like scalping, why I like to wait for some confirmation. But I think it'll kind of come the more you trade too, right? To get the kind of sense of levels. And then I think, because it sounds like from what you said here, the point I feel it's so tempting. Yeah, it's very tempting, right? But I think basically from what you've said was, it basically seems like the issue is just entering too early. So I would say wait a little bit for confirmation, and then you won't have to, you know, dollar cost average, because then you'll have the right entry point, right? So I think that's my advice to you. That's my advice on dollar cost averaging in general, because I think I didn't do much dollar cost averaging just because I use tiny position sizes anyway, but I think my issue is I would bail out in positions too early, which is still bad. You could potentially get profits, but I would just, you know, cut and run, right? So I think it's a little bit better if you kind of wait to see your confirmation, if you see the pattern, and then try to get in. Obviously, you're not always going to get bottom or top wick, depending if it's a short or a long. But I think, yeah, patience is, I think, really important. And yeah, thank you for your question. I really appreciated it.
Absolutely, and great answer.
Thank you.
Grandma Ruby 143. Sharif, does using the fib tool help figuring out DCAs? Look, we haven't gotten into fibs, and I got to tell you the truth, I don't use fibs for intraday trading. I like Fibonacci lines, but more for a wider time frame, the 4 hour, the 1 hour, the daily, the weekly. I personally haven't used it for intraday trading. That's not to say that it's not usable for that. I just personally haven't done it myself. So I'm going to go ahead and say I don't know the answer to your question because I've never actually experimented it with myself. I like to use actual price action levels where I see multiple touches, multiple bounces or rejections off that key level, off a particular price. I like to use Vwap, you know, the 50, the 200. However, with those indicators, like I mentioned at the top of the show, only use them if you're seeing a level of respect between that instrument and that indicator. If that indicator is not getting any respect from that instrument, it's blowing through it, going above it, going below it, and really not showing you that it's using it as a level of resistance or support, it is not to be used until there is proof otherwise, okay? So that's what I would say to you on that. Sorry, I don't have anything to add with respect to intraday use of Fibonacci's, but hey, if you use it to some success, absolutely let me know. I would love to know. Paula DeLuca, why can't we see Sean and Neil's positions throughout the day? Coming soon, my friend. Stay tuned. It was supposed to be on Monday. It's probably going to be by the end of the month. Not gonna tip the hat, but very, very, very soon. And it's not just going to be their positions. It's going to be all the trades, baby, and the times and the prices and everything. Stay tuned for that. Moving down here.
There's a question for you, sorry, from Charlie Taff. It's a pretty interesting one there. It's near the bottom here. Near the bottom?
Okay. Yes. I just didn't want to skip all the other ones on the top.
I can read it out.
Yeah, go for it.
Yeah, so it's, do you ever break position sizing rules when trying to build a good average cost? I did today to test along, and it is working. However, I understand this could have gone poorly.
Look,
regards to, we just talked about dollar cost averaging.
Are you asking me if I've ever dollar cost average unplanned? Obviously. Yeah. I'm a bad trader, right? Like the whole point is, I'm telling you what the good habits are. Whether or not I'm being hypocritical about it, entirely different story. I'd like to be a better trader. I aspire to be a better trader, and I kind of know a little bit of some of these rules about, look at the NQ, man. We just made high a day through the NQ. The Katina man nods positively there as we make a 15,920.5 break, a new high of day. Oh yeah, what's the price again? 372 long on Mr. Softy. The Katina man took that beautiful Vwap hold, by the way, on Softy at that level. Look out for that trade, especially the people that want to follow along with the Katina man's trades. So yeah, just circle back. Yes, I have absolutely dollar cost average when it was unplanned. When I wasn't supposed to, I traded emotionally. I traded stupidly. All the above. All of that included, okay? So, you're not alone. You're not alone, trust me. Moving back down, Blackberry, Adira, Sharif, lost quite a lot of money in doing unplanned DCAs out of intuition or guesses. Blackberry, you are not alone, my friend. And that's why we keep talking about DCAing has to be planned. And when you're planning it, you have to make sure that if all your dollar cost average trades were to trigger that and you stop out, that it has to fit within your risk management parameter. We talked about that, position sizing, the 1% rule, etc. You have to fit it in. So the math has to be done, and it's a lot easier to do, calculating it for a swing trade than it is to do it on the fly, because the stock doesn't stop and wait for you. It's going to move. It'll
take off without you.
Exactly.
You'll miss the plane.
So it's practice, and more practice. Okay, moving down with some of these questions. Charlie Taft already got to that answer. Moving back down here. Patrick Langlois says fibs for retracement is good on options, yet I feel it doesn't always come back. So one time thing unless it does. Yeah, that's what you kind of want to stay away from. You want to see that it works obviously more than once. That's not enough of a sample size. People happy that Apple's booming. Yeah, okay.
It's not the dead one, it's the zombie one now, I guess.
Can you check out BAYRY? That's an OTC stock, obviously. Marky Mark, we'll have a look at that in a minute. I'm a bad trader. I should hang it up. No, Angel, you're probably going to be a lot better than me. Keep plugging along. You're asking all the right questions, by the way.
Yeah,
you're quite humble enough to know where you stand, and that it makes for an undelusional trader.
Yes.
Matthew Cook, I'm a bad trader. Yeah, people seem to like that one. All right, Blackberry, yippee! Still in a positive trade on the NQ long, thanks to your buffer tip. There's more room for fluctuation now without kicking me out. Yeah, and especially on something as volatile as a futures contract, because it's so heavily influenced by so many different factors. There is so heavily tech weighted, especially with the Mag 7. So you're going to get a lot of volatility on that. So when you are playing off levels, give it some room. It's not going to hold it strictly. Unlikely. Maybe it does, but I would say it's unlikely to hold to that strict, 15.9 level. It's going to be the vicinity, right? Moving down on some questions here. Hampton's Trader, level two time and sales. Yes, coming soon. So next week, we already announced we're doing chart patterns.
So excited.
The week after that, it may or may not be. We haven't decided quite yet what going to be, but it may be time and sales in level 2. We shall get to you. We shall get back to you on that.
Yeah.
John Del Segno, IWM about to break tops. Well, as I look there, the Russell is an absolute rocket ship and has been for a bit. 1 1/3% today. Compare that to the measly 0.12 on the NQ or the measly 0.15 on the ES. The Russell has been very strong. The Russell is directly related to the outlook on interest rates. These are small companies. They are unlikely sitting on a pool of cash, meaning that if they want to grow, they got to go into the money market and borrow at high rates. That hurts margins, that hurts their bottom line. Therefore, they suffer in high rate environments. Therefore, when we talk about any, hint of rate reductions, these guys are going to pop. So that is the look there. And you're absolutely right on that. Shout out to you, Hampton's Trader. Shouty, that's an Arabic name. Couldn't agree more. A zone is better than a line. Yeah. Shout out to you on that. Looking just out here, seeing what else kind of questions we got. Angel again. Also, thanks for labeling this segment with the topics objectives so I can refer to them again. You're more than welcome. Obviously, we want the environment to be conducive to good learning. A good learning environment is what I'm trying to say there. And anything we can do. And guys, seriously, if you have suggestions about what we can do to improve, this is obviously a work in progress. This is the first week that we've been doing this teaching midday show. And we'd love to hear your feedback. Things that you don't like, things that you like. And we'd definitely be more than willing to oblige, if it makes sense for the show. So, yeah.
Yeah, we're here to learn and to trade, and I think even like I said, like being able to talk here about the market, but also in preparing the topics, I feel like I'm learning a lot more. So I hope you guys are getting something out of it. I really appreciate all the insightful questions, and everyone being so awesome as I'm kind of learning and growing as a trader. In the meantime, though, I would like to preen for just a moment. I'm super happy with this gap short here. The GPS found us the right route, and the right route was to the downside for right now anyway. I do have part of my position time to go out thereabouts here, and the reason I say that is because I look at like levels for points of entry, like higher highs, higher lows. Learned a lot of that from how Sharif trades. I also think that as someone who's still very new, still looking at indicators, I find a pretty good indicator to use for myself because it's really visible. It's right in front of me, are chart patterns, right? Which is part of why I'm so excited to get into more of them next week. And so basically, I like that we had a higher high, then we had a smaller low, right? And then we had this little shorter low here. So I was thinking, we're doing a bit of a compression pattern, but if I can short this range at least down to here, which is where we had a bit of resistance, I'm good to go. I'm going to keep a little bit more of the trade left, though. We talked about position sizing, a piece for the dream, if you will. So if we shoot below Vwap, I can get a little bit more profits, like a little shark waiting at the water there, right below Vwap. But I planned that out ahead of time, right? I think part of trading too, as we were saying this with regards to dollar cost averaging, it's the type of thing if you want to do it, you have to plan ahead of time. But I think also all of trading is just kind of planning ahead, watching and waiting. I was looking at the gap for a while today, and I couldn't see a point of entry, so I didn't want to force a trade. I saw this little entry, and I decided I wanted to, dip in, dive in the water here, go to the mall. Shout out to Robin Sparkles. But yeah, so I like what's happening here. I am waiting, waiting patiently to get part of my position out. But yeah, I think just, waiting, watching, and maybe this trade wouldn't work out well. But you know what? I had a plan. If we get to 18, I'm outie, right? So it's, as long as you have a plan for both sides of the coin, if it goes well and if it goes badly, then you're prepared. You're basically just set and trying to control emotions. And I know someone mentioned in the chat too, and this is a fair point earlier, that, I am paper trading. So with regards to emotion, I think still, though, I take it really seriously, so I still feel like I have to control my emotions, even if it is paper trading. But yeah, that's how it's going. There we go, trade time.
I've been handed the the sticky note. I'm actually getting to hold on to the sticky note over here, and I've been asked to read the top line by the Katina man. And it reads as follows: 143L, which means long, strong bounce off 140 yesterday with something bouncing a bit. With what? Bouncing a bit, Katina man? Who knows? Retail, with retail bouncing a bit, because we are in the midst of retail. Anybody looking at Amazon there knows we just almost touched 145. There you go, baby. That's a $2 winner on a very stable name. I got to tell you, Amazon doesn't trade as erratically as I would say Tesla or Nvidia or some of these other names, so a bit of a safer trade there. The Kenobi, we tried to get his opinion on it. He told us it's trading.
So, it's an opinion. It's a statement.
It's funny.
It's a statement.
All right, we got some tags here. I was just using the bathroom, so I'm going to go ahead and look at some of the tags. Rafael Toralvo, I hope I didn't butcher your name, and if I did, I'm sorry. Sharif, is an honor and privilege to have you both sharing your experience with our community. Fantastic midday show. Thank you very much, Rafael, for your kind words. We're obviously here for you guys. You know, unless you guys are here, there's really no point to what we're doing. Thank you for your kind words. And again, if you guys want to see something, you know, in addition to what we're already doing, please do tag me so that I can see it and make the suggestion. Interesting comment here from Steven. I've been day trading for over a year with no success, still fighting because I know it's 100% mental why I fail. My friend, keep plugging along. Just make sure that you're actually managing your risk in a way that helps you, or that allows you, I should say, to continue to plug along. You can't day trade if there's no money, right? And there's not going to be money if you take big L's. But 1 year, I got to tell you the truth, is not that long. The Katina man has been trading for 20 some odd years, so has the Neil. And, you know, that pays. So try to maintain your longevity by maintaining a healthy risk to reward, a good risk management strategy. So shout out to you, Hal R. Sharif, I think you're doing an amazing job. Please keep it up. Great explanations and fantastic learning opportunity. Thank you very much, my friend, for your kind words. I do appreciate that. And again, anything that we can adjust, please let us know. We'd be more than happy to oblige. Let's see what else is being said here. Halar, Dara, the both of you make a great pair. Hey, thank you. We get along quite well, yes. Dara and I. Let's keep going over here. Sharif is the Sheldon of Trader TV. I don't know. Is that good? He's a sociopath. I'm assuming you're talking about Sheldon Cooper.
Yeah, I mean, that's why I made this face.
But I love his character.
No, I'm a huge Jim Parsons fan.
Okay,
so.
Yeah, Jim Parsons is a hell of an actor. Okay, I gotta tell you, I gotta go off on a little bit of a tangent here, because the writing clearly changed for that character as the show went on, because he was much more robotic and like the real Sheldon in the early years, and all of a sudden he became like this emotional person.
He got with Amy. And then they changed his character.
Amy changed too. She was like that. She was more of like the robotic type person. And then you could tell the writing for them changed. Whoever the writer was, it was no longer the same writer.
Yeah.
Yeah. So I gotta tell you, I didn't like that. I like the old Big Bang Theory when he was like more of like that, obsessed with you know, string theory and moving physics ahead and stuff. But yeah, I didn't like when they changed the writer on that app, but that's neither here nor there. Let's keep going here. Blackberry, Adara, Sharif, I like to look at the RSI. We're going to talk about relative strength index and how to use it now and then, but overbought or oversold can stay for quite a while. It's important. Is it important for day traders? Here's what I'd say. I've never used, and we're going to get to our relative strength index use one of these weeks. It's not going to be like next week or the week after, but how Michael Noss showed me how to use relative strength indexes as follows. You don't use it as a signal to buy, or sorry, to sell above 80 and to buy below 20. You're looking for RSI divergence between price action. What does that mean? So when the RSI makes a new high and the price action also makes a new high, you're looking, that is not diverging. There's some convergence there. It's when the RSI doesn't make a new high, but the price action makes a new high. Therefore, they are diverting, and it's an indicator of a possible impending breakdown in the price. So you're looking for divergence between price action and relative strength index. And that's how I was told how to use it. And I've never used it on an intraday basis. I use it more for swing trading and analyzing stocks on a daily chart, a weekly chart. That was my, that's my little 2 cents on that. Moving down. This thing. Juan Alejandro Castillo. Sharif, there's a bunch of snakes that sell expensive market learning programs that are not happy right now with this new segment. Thank you so much. Bang, 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 bang. It's not my segment. This is the product of the Brendo, and you have him to thank. It was his idea for this. CME, Sharif. What was the small modular nuclear company you mentioned 2 days ago? Oh, the small modular reactor. I don't know which one it was. I just like the segment. I think it's a very interesting segment. I know that the province of Ontario is going gung-ho with it, especially in the north when they're looking to expand some of the energy options there. I don't have a name for you, sadly. I just like the segment as a whole. I'm talking about clean nuclear fuel, nuclear energy. Again, please don't get political about this in the chat. You know, we're just talking more from a market side here. Mark G, Sharif, Mark from Florida. How would you recommend one gets out of a short position that is currently in the 50K negative? I mean, I have nothing for you there, my friend. The Katina Man says DCA. That's Katina Man right there. But in all seriousness, though, I'm sorry that you're in that position. But you know, something tells me that you probably wouldn't have been in that position had you adhered to a stop loss, had you marked out clear levels of resistance and support, and once it broke down below that support, you adhered. And you bit the bullet, you took the L, however much it hurt you. And the thing is, with a shorting position, there's an unlimited amount of risk in theory, right? When you're long something, it can only go to zero. You can only lose the investment that you put in. When you're short selling something, in theory, it can go 5 times, 15 times, an infinite amount of times. So I don't have anything for you on that. I'm sorry, but you really need to manage risk. Antis Trader, today I'm very happy. Colombia beat Brazil for the first time in its history. Don't I know, my friend? Don't I know? Luis Diaz, is that the Chilean nightmare? Is very happy with that, I'm assuming, because Chile and Brazil, obviously, competitors there in South America for soccer. Yes. Luis Diaz with a brace yesterday. His dad has been released. He was held hostage, and his dad was at the game, and he couldn't believe that his son scored 2 goals. He almost fainted in the crowd. I couldn't have been happy for him.
That's beautiful.
Yeah, it was.
That's so
Shout
cool.
out to Luis Diaz, one of Liverpool's best strikers. Obviously not better than Mo Salah, right? Because Mo Salah is my guy. Anything you got over there, Adair? Jameson, sorry, DCA dollar cost averaging, sorry.
I have this comment from Elon, not really a comment, not really a question, but a comment that is very relevant to what we're talking about here. My humble opinion for trailers who feel beaten, start taking small profits rather than targeting the big fish. Learn fishing in the pond before going in the ocean. A, really good point, and B, we know I love a good pun metaphor situation. So you win on both counts there. But yeah, in all seriousness, I think that's why I really started to get into scalping, because I was like, sorry, I'm just changing my out here on Gap. But I think that kind of helped me, because it was like, if I'm not worried about what it's doing like in 5 to 10 minutes from now, if I'm just worried about what it's doing in this candle, then I think I have a better chance at getting some profits, right? At securing at least a little bit of the bag, like a couple seams or what have you. So I think dumb pun, it is what it is.
That's amazing. Come on, man.
Thank you. But yeah, so I mean, I think it's a really good point that you made, and I think I would say, I'm not saying scalping is necessarily less risky, because it's probably not, but I think you have to think about what your personality is. I'm someone who I like to have a plan, and I like to kind of know what I'm doing, and I like things that happen quickly. So for I love there's a glossary now.
What is that?
Oh my gosh! Yes. Oh my gosh, I love that. So I got really excited. But so yeah, so basically that's why I like scalping, is because I can be in a trade shorter term as long as I have a plan for it, right? So I like things that move quickly. So I think take a bit of time to think about what your personality is and what trade style works best for you. with regards to that, because that's when I think I had some more success. Although this gap short is, I have to say, going quite swimmingly. A bit of an exception in that it is not actually a scalp situation. We did stay in this a little bit longer because I think as you trade too, you get a little bit more confident, you get a bit more emboldened, and your situations change. But as we go back to the upside here, I think I'm probably going to get out the rest of my profit at this point. Yeah, I don't know. I think I appreciate everybody saying stuff here in the chat. Let me see if there's anything in the chat here. There's a point they're not explaining. If you decide to take smaller profits, adjust your stop, or you'll end up taking a 1-to-1 or even worse, bigger losses than winners. I mean, I think it, like, that's a fair point. I think it really like depends on your. I mean, it's different too. Like, I'm obviously trading simulation, so it is different. But I think it's you know, a different. It really depends on, I think, the person, and I also think it depends on what your ratio is and how much of a loss you want to have, right? And so I think for myself, especially with scalping, I like to get in when we have a little bit already to the upside, right? So we just have like a quick wick up and then we get out. Obviously, each strategy is different. There's no one-size-fits-all approach. Crap stock saying as well, reduce your stop along with smaller profits. That's fair. Yeah, I mean, if you're going to use risk-to-reward ratio, everyone uses their own approach, then yeah, you might want to have a smaller, like that would make sense, right? If your risk-to-reward, if your profits are smaller, your loss would have to be different as well. Also, thank you very much to Dorothy Brendlin. Love your perspective, and I really enjoy learning with you. Thank you so much. I really enjoy learning along with everybody here, Sharif, everyone, and everybody's been so great in Trader TV and also the chat here. Appreciate all the support.
All right, now we got to get to the real question, Adara. This is the very serious one.
Is it? I don't know.
Very serious. Smooth1J asks, Sharif, Messi or Ronaldo?
Ooh.
Yeah, the Neil likes that one as well. And I got to say, man, okay, here I go. It's not the first time I answer this, obviously. In terms of training and acquired talent, Ronaldo. In terms of natural talent and a gift from God, Messi. No question about it. The ball is stuck on his foot, right? I mean, it feels like sometimes there's like a string between the ball and Messi's foot. He's obviously got excellent control. But then you have facets of Ronaldo's game, speed. I mean, at his peak, obviously not now, right? Speed. His height, the way that he can jump. I mean, I don't know if you guys have seen this, but there was a social media video with the ball dangling as high as Ronaldo had jumped in one of these important games, and people couldn't get within like 2 feet of this thing. I mean, his vertical was insane for somebody his height and non-basketball player too. So I gotta say, there are elements of Ronaldo's game. Oh, and by the way, Ronaldo's positioning, he always seemed to know where to be in order to receive the pass and do that easy tap-in goal. You didn't see Messi like that. Messi's a creator. He's a facilitator. He's able to get away from 2 or 3 guys and create space by himself naturally. Ronaldo can take 1 guy, maybe 2. But Messi, I think, much more of a really like naturally gifted player. Ronaldo, much more hardworking and acquired skill. That's what I would say there. If I had to choose, at the end of the day, you got to go with Messi because he's got the World Cup. And the Chile nightmare is all about that. He agrees with me. Are you there too? The Neil says Messi as well. Yeah. So I wanted to caveat all that because I have to give Ronaldo his due credit. I mean, the man's a hell of a player too, obviously, right? Yeah. So, obviously, everybody in the chat, I love that. I love that. That was awesome. All right, let's see what else people are talking about here.
I enjoyed that. That was very
Who are these guys? Soccer, says Jim's Ed. Come on, man. They're only like some of the most popular people in the world. Messi and Ronaldo, obviously. I think Ronaldo has the most amount of Instagram followers in the world. Pretty sure.
Yeah, I think he does, or at least at one point, I think he did.
Yeah, at one point. Maybe he's been overtaken by The Rock or one of the Kardashians, or something, but whatever.
I know Selena Gomez at one point weirdly was on that list.
Yeah, she's up there,
which is
too.
random.
Swift
Yeah.
too, man. They're both up there now.
Yeah.
Henry Chung, in my humble opinion, Messi is like MJ and Ronaldo is like Kobe. Okay. You're really making it easier for the North American people to pick up on that analogy. Very good. I like that. Jay Lee, shout out to Jay. Ronaldo can outrun, outjump Messi. I agree with that. But guess what? It doesn't matter. Messi scores with way more assists, way more. Agree with you. Messi's a facilitator. He can play the number 10. He can play the number 9. He can play. Soccer people will know what I mean by that. So yeah, we get to that. Who are these guys? So funny.
Uncut Records in the chat asking me Drake or J. Cole. Not a huge fan of either, but I really dislike J. Cole, so I'm going to take Drake on this.
Go.
I find, J. Cole is...
Neil's giving you a look over here. I'm going to have to stay out.
I don't love Drake either.
I'm going to have to get out of this.
To be fair, I don't love Drake either, mind you, but I don't like how J. Cole feels the need to preach to us. You can be a lyrical rapper and not morality police as much as J. Cole does. That being said, however, I do like some of J. Cole's collabs. I found the whole "Let Nas Down" song to be really upsetting as a Nas fan. Like, calm down. But I'm sorry, Neil. I'm so sorry, Neil.
Neil.
We can have this conversation after the fact.
Fantastic.
But yeah, I feel like I really offended Neil here. I'm very sorry.
I love Fridays around here.
I don't know. I'm not a huge J. Cole fan. I have one album though. I have one album.
All right. All right, guys, got about a minute left on the show, maybe a little bit less than that. So again, for next week, Adira and I will be doing the same thing. From 11 to 2, we're going to be doing a little bit of trading. Like today, you saw Adira in a couple of positions. I've been holding this NQ position literally the entire show. And we are pumping again on the NQ. We held 59 very nicely, but I digress. Next week, Adira and I will be talking about chart patterns. Get your books and pens and papers or your screenshots, whatever, handy. We're going to be talking about my favorite thing, chart patterns. We'll be talking about flat bottom breaks, compression patterns, ascending wedges, descending wedges, heads and shoulders, reverse heads and shoulders, everything. Bull flags, bull pennants, the gauntlet, baby. We're going to be talking about it all. But it is now 2 o'clock, Adira.
It is.
Send it off again like I did yesterday.
Love that. We had a great time. We're really excited for next week with more trading and apparently controversial rap opinions. We will see you all. Brendan is at the big desk. Same back time, same back channel on Monday.
Hey guys, 2 o'clock on a Friday afternoon as we head towards the weekend. Welcome back in. It has been quite the couple of days here for energy stocks.